Good morning. Futures are flat. There's no iron condor this morning. Event risk. Okay, so Affirm Holdings had earnings. It's higher this morning. Marvell. It's down a little bit. Marvell trying to recover. Looking at stocks we talked about recently. SpaceX still sitting on top of the 50-day moving average. Microsoft a bit higher. Microsoft looks good. NVIDIA post earnings. Okay, it's inside the wick, the upper half of yesterday's range. Taiwan Semiconductor, pretty big trade on Taiwan Semi yesterday. That's an inside day for now. The 380 calls, there was 10,000 contracts traded yesterday in one shot. Tesla, it's up a bit this morning. It's gapping up. Tesla gapping up a little bit. Apple higher. We're looking for that to continue this morning. Bollinger Bands tight. We're looking for these Bollinger Bands to do the opposite, roll up and down. If both of these conditions occur, that will tell you to look for a fast move up or a fast move down. In this case, doesn't look like it's going to be moving lower. So Apple looks good squeezing. Microsoft is squeezing too, if I recall right. Microsoft is tight. All right, it's already starting to turn. You can see it's starting to turn. The upper band starting to change direction. It goes like that. Look for a fast move to the upside. Microsoft, if this lower band moves away from the upper band, look for a fast move to the upside, breakout. Okay, we got about 10 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday. We're waiting for Fed Chief Kevin Warsh to speak at 10 a.m. in Jackson Hole, 10 a.m. Eastern. That'd be 8 a.m. their time, right? Mountain time. Continuing on, stocks that we looked at this week. We do have put flies and call flies on the spiders. All right, so put flies and call flies on the spiders. Very cheap. These were $17 yesterday. Those were super cheap. I added to this one at 35 cents. All right, I added to those last night. So any big move, we'll capitalize. All we need to do is get near the strike 780 or 760. Strategy, MSTR, inside day for now, strategy. Lulu, a couple of people mentioned Lulu yesterday, day before. Lulu's a little bit higher. Marvell had earnings. Like I said, it was down a little bit. Workday with earnings. Okay, the security stocks, CrowdStrike, inside day. Zscaler looked the best, inside day. Palo Alto, earnings next week, I believe Tuesday, right? Inside day. So the markets are flat at the moment, looking for the Fed chair to say something that'll push us in either direction or nothing. Okay, so today's Friday. You can see Gamma clustered all around. Price action is positive Gamma 7600, 7750, 7775.
That's in an effort to try to support the dollar as well as just be more mindful about inflation. But they're still got a little bit more runway and are going to wait for the committees to come back and define what inflation actually is.
Yeah, that's right. I think if anything, hints of 1 or 2 25 basis point cuts the next several quarters, no big deal. You're looking at one. Yeah, because I think they want to keep those inflation expectations in check, and they have been reasonably in check. And the thing that would make the gasoline and energy price.
Okay, let's see what is moving here.
Of inflation, but if it leads into expectations, that's where you can get a little bit of a.
Yeah. Fascinating conversation.
Really nothing to talk about right now. Pre-market.
Thanks, everybody. MRBL. I'm Scott Steven, and I play private investigator Archie. And I'm Jana Lee Ortiz, and I play Emil Ochoa. Season 2 of Archie premieres Tuesday, September 15th on ABC. I may have a job for you.
Okay, Nvidia is high on the sizzle index. Sizzle index is telling you it's trading 2.5 times normal option volume. Nvidia. Okay. It's jumping around going into the opening bell. Again, there's no iron condor this morning due to event risk. We got 4 minutes to go. Okay, Bloom Energy. That's down again this morning. Stocks on the top of the NASDAQ 100. We've got Take Two. It's gapping up Take Two. Let me just post these in the trading room. Okay, these tend to stay in the top 10. I just noticed Apple pushed up a little bit.
So I wanted a new credit card, not a hit to my credit. Good thing Experian has no big decline. They match me with cards that won't ding my credit if I don't get approved. So I got the card that I wanted and didn't worry. Get the app from your big financial friend, Experian. Real life needs real money. Active Bank makes the money part simple with personal loans up to $60,000, rates as low as 6.53% APR, and funding in as little as 24 hours. We clear the way so you can make it happen. Keep running. Your son knows. This life is gonna work, isn't it?
Okay, App Lovin'. Okay, that's gapping up a bit. App Lovin' turning the corner. Coca-Cola Europe, CCEP. Okay, let's get ready. We got 2 minutes to go. Man, the commercials are getting so stupid. Oh my gosh, especially these gaming ones. Okay, Apple popping up here. Apple starting to pop up. Okay, so these tend to pop up in the morning and then fade as pre-market orders come in. Orders at the close yesterday to fill this morning. A lot of times you'll get these pops higher. There's Apple's on the move here. Apple. So is Amazon. Amazon's popping up.
KLAR.
Okay, let's see. Got the Apple. Let me open an Apple sell order into this, maybe. There's a September, so they should be fine. 315, above 315, remember call wall, Apple. That could explode. Okay, Apple above the call wall could go boom. About to open. Okay, we are open. Okay, Apple. Let me see what that looks like. Looking good. Apple. Okay.
High took alert plus 800.
AFRM. RBRK.
Okay.
RIBN.
Affirm.
USDE.
Call sign. Let's see.
ABBC, RBRK, AFRU, and BBK.
All right. Affirm. I just took the call side off of that iron condor.
NA,
Affirm just exited.
WHLR, QNRX,
AEMD. PURR.
KXIN, AEMT, ABBC, RBRK, AFRU, and BBK,
Affirm holdings.
BMNU, BJDX,
BMNU.
Okay. Apple. All right. So a little jump there. Tesla starting to go.
KLAR.
BMNG,
All right. Tesla. Tesla starting to move. Okay. Tesla. We need to get above the 50-day over here on the right. Okay. Palantir.
LABD.
Palantir is up again.
BJDX,
NWL. HPQ.
Okay. Palantir looks good. Strategy. Okay. Microsoft turning up. Microsoft. Okay. Microsoft doing what we want. Microsoft.
USAR.
BJDX,
NOWL. CRM.
BCAB,
Okay. Microsoft going a bit here, along with Apple.
QNRX,
Microsoft looks good. Didn't we get back into Microsoft yesterday? Yeah, we got back into Microsoft on the dip. That looks good.
IONC.
BJDX,
NABL.
CYAB,
BRNX vaulted down. BBWI.
QNRX,
Thanks to everyone for all of the teamwork.
CYAB,
Money Magic, thank you.
WCT,
RUM. BBWI. OKLL. CRMG. LITZ.
QNRX, AEMT,
BB.
Yeah, Apple looking really good here. Apple looks good above the pre-market high. Okay, note the Bollinger Bands.
CYAB,
LITZ.
QNRX,
SOLS. CRMG.
AEMD. WCT.
Apple looking good.
OKLL. QNRX.
QNRX. KXIN.
SOLS. BBWI. LITZ.
Bollinger Bands are opening up, telling you volatility's picking up. Looks good.
QNRX.
Apple starting off the day.
CRMG. QBTZ.
KXIN.
LITZ. SMCX. RGTZ.
Okay, looks good. All right, we're going. Let's see if we can hold on to this.
QNRX.
QNRX. KALA.
IONC.
CYAB.
KALA.
KXIN.
Microsoft.
SNDU. SNXX. SNCX. CRMG.
QNRX.
RGTZ.
Okay, Apple looks good.
KALA.
Microsoft. Okay, looking really nice here.
SNDU. SNDG.
NCPL.
SMCX.
QNRX. KALA.
BRNX may resume in less than a minute.
TRO.
GENB. SNXX.
AEMD.
SNDU. SNDG.
SNDU. SNDG.
SMCX.
KXIN.
GENB.
SMGF.
CRMG. SNX may res in 10 seconds. SNDU. SNDG.
All right, Microsoft pulling back in a little bit.
MUU.
Meta looking good. Let's see what Meta looks like. Meta. Waiting for the first few minutes to see if we get any kind of follow through. Don't want to jump in. Feet first with Warsh speaking in less than an hour. 22 minutes. 21 minutes. Okay, Meta looking pretty good here though. Meta looks good.
SNDG. MUU.
Intel trying to turn back up. What's SK Hynix doing? SK Hynix is gapping down but bouncing. Palantir breaking higher. Palantir. Did I add back any Palantir? I did keep some, but let's see. Netflix, Taiwan Semi looking for a bounce in Taiwan Semi. They had a big trade on it yesterday. The 380 calls, 10,000 contracts. Looking for a move to the upside. Bollinger Bands open up here as well.
SNDG. NVIG.
SWBL.
AEMD. IRD. MVLL. IRDX.
Okay, Affirm Holdings, AFRM. Took profits on the gap up, pulling back. I have puts left.
SNDU.
If this starts to fade at all, I'll take those off for a smaller loss. Actually, you know what? Let me go ahead and do that now. Actually, there's 0, so never mind. Affirm. Okay, it projected a maximum profit of $185 per contract. We made 168 per contract with these iron condors. Iron condors, the way they were structured, we had a maximum profit. I meant to take the 180, 185s because I took the the 80, 85s. I took the 75, 80 instead. So we're already in the money. Didn't get as much bang for my buck. It was starting to reverse now. Okay. Let's see if this picks up at all. Anyway, so the maximum profit was projected to be 185. We got $168.50 per contract. Okay, Microsoft turning back up. Microsoft turning back up. Okay, we're watching that pre-market high and the volume. Okay, Apple, pre-market volume. Both of these, typical big cap tech volume. It's hard to make 2 times, 3 times our vol in these stocks. Would take a lot, an institution or 2 or 3. Okay, Microsoft looking good, taking off to the upside. Meta looking good. All right, Meta's doing well. As we were looking for Meta to turn up and follow through. Wednesday we got rejected. Again yesterday, inside day. Now looks like we're going to head higher. So you could wait until we get above the 50-day. That would tell us that the trend is continuing. Most likely continuing. Okay, volume looks pretty good on Meta. Pre-market volume is negligible. Okay, so stocks that are high on the sizzle list. CMRC. Who is that? CMRC. Don't recognize the name. Commerce.com. Looks pretty good for a $2 stock. The Gap. Trading 36 times normal volume. ESTC. Elastic. Isn't that like a food company or something like that? Elastic.
INTW.
AXIN. FNGR.
BBWI. What's that? Bed Bath? No, Bath and Body Works. Okay, that's up this morning. Bath and Body Works. Some of the retailers look really good, like Costco. Last week was trying to push higher through Monday. BJ's, Abercrombie and Fitch, still looking good. American Eagle Outfitters, not so much. Ross Stores, TJ Maxx took a hit, right? TJ Maxx. Okay, those don't look so hot. Was it Doximity? Is that DOCS? I always get these confused. Doximity looks pretty good for $20 stock. It's starting to ride the 21-day. Okay. So look at the down. This reminds me of Netflix a few weeks back.
CRCD.
FNGR.
Okay, let's see. Number of stocks advancing, 284. 284 stocks advancing. We've got 1, 2, 3, 4, 5, 6, 7, 8 sectors advancing. Core 1M is back down to 873. So it got up to a high of around 11, dropping back down to 8. So that's telling you people are buying calls again. They're not going to learn their lesson. Okay, I would be doing the opposite of what the overall market is doing. People are chasing calls. I would be reducing risk. We do have call flies and put flies on the SPY, as you are aware. Yesterday we bought these at $17, 10 of those for 170 bucks. Big bet if this pops and heads towards minimum 780. If it moves higher today, we'll cash in on these. They expire on Monday. So that's for the SPY. Okay, right now we're just kind of chopping around above VWAP, so that's a good sign. Microsoft is still going, so we'll keep an eye on Microsoft. Okay, this is looking really good here. Microsoft. Okay, let me see what these Microsoft calls. Microsoft.
CRMG. STX.
BJDX.
BJDX.
Okay, Microsoft. We have November, right? November call. What do we have here? Microsoft. December calls. Okay, those are 57 deltas now.
CRMG.
FNGR. BJDX.
Okay, we filled at 248, I believe. 238. I'll leave it at 250. That's okay. Some of you probably got filled at 250. Okay.
KXIN.
AEMD.
AEMD.
All right, those are 57 deltas. And doing well.
BJDX.
Okay, Apple
EURR.
just got knocked off of its highs.
AEMD. SWBL.
All right, Intel's going here. Intel.
WDCX. MUU. MULL. GENB.
KXIN. KALA.
CRMG.
Nukes are down. Okay, futures look like they want to run here. We got Warsh.
KALA. KXIN.
Yeah, me too. Me too.
BEX.
Okay, Microsoft looking really good. Intel running.
KALA.
GLU. AMA resume in less than a minute.
Intel's running. Let's see, what's SK Hynix,
KXIN.
Oracle, trying to get out of this. Oracle trying to leave the consolidation zone.
KXIN.
And Microsoft looks really good.
NBIC.
Microsoft. Okay, a little profit taking now, Microsoft.
May rest in 10 seconds. GLUPA may rest in 10 seconds. PURR.
FNGR.
S&P just going to chop around at the moment.
KXIN.
Intel still pushing. Intel.
CBAT. IONC.
AENT. NGR.
PURR. SQL halted down.
Intel.
CX.
Nvidia's down right now.
SNTG.
KXIN.
FNGR.
All right, Taiwan Semiconductor, TSM. Okay, Doji inside of the top half of yesterday's range. AppLovin, Western Digital, these are all higher this morning, above pre-market highs. Airbnb, been consolidating for the past few weeks. Airbnb, watching that one, above its pre-market high. DoorDash, that one's been trending. DoorDash still trending. What's Chewy doing? Chewy dipped on Wednesday, bouncing. DoorDash looking pretty good. This is despite everything that's going on, just trending. DoorDash trending.
KXIN. BGDX.
Okay, DoorDash, the trend continues. What about Uber? What's Uber doing? Uber, all right, above the 200-day, above the 50-day, above the 21-day. So we just need this trend to mature a little bit more. What's Robinhood doing? Robinhood, okay, that did break a bit higher, but flagging Wednesday, Thursday, Friday.
BGDX.
Okay, so triple top breakout potential in the New York Fang. This would be big if it happens.
NGR.
BAIC.
PUR.
NGR.
If this goes, this could be pretty explosive. The New York Fangs.
BGDX. WCT.
WCT.
XLAB.
Okay, there goes Google now. Google on the move. That's still consolidating.
IRG.
Netflix, good old Netflix, still trending.
BJDX.
BGDX.
CRMG.
Can Netflix climbing the top 10, climbing into the top 10?
PURR.
AIFF. KXIN. EPCB.
CRMG.
All right, Intel looks pretty good, huh?
PG.
Intel, nice pop this morning. Okay, let's see what's actually moving here. Okay, so looking a little better. This was all red except for the growth part. Flat across the top. Large cap value, core, and growth, all flat for the most part. We're seeing small cap with some movement here. Let's go take a look at that real quick. VIX. VIX is at the low. IWM.
SQL may resume in less than a minute. BJDX.
Okay, small caps, nothing. Okay, let's see what the group looks like, though. If there's any outliers, S&P 600 small caps. Peloton. Okay, Peloton.
EGDX.
Peloton worth a shot here. If it can gets it back above the moving averages.
SQL may rise in 10 seconds.
The 200-day.
FNGR.
Peloton. Okay, Netflix is still pushing.
FNGR.
Anything? A Saber. Go.
USDE.
Grocers Outlet holding. GO looks good.
FNGR.
Okay, that's trending. 9 EMA, 2150 up and to the right. 200-day has flattened out from moving lower into this year. Now it's starting to turn up. Grocer, is it above the 60-minute 20 MA? It is. It's a nice move here. Currently up 4%.
USDE.
FNGR.
FNGR. PURR. INTW.
CELU. USDE. FNGR.
Okay, S&P is just chopping people up right now. I wouldn't be doing anything. I am not doing anything until
FNGR.
after the Fed speak. Intel looks pretty good. Intel.
INTW. BCAB.
BCAB. FNGR.
Okay, Intel looking good. Check it out. Stop underneath the bullish 20 EMA at 89. 89, 75. Okay, that's a bullet. Okay, let me buy some Intel. All right, I want to buy some Intel. I'm going to go out to December maybe, or should I go closer?
FNGR.
Intel. Do I have any Intel? I don't think I do. INTC, Intel. I do not. Okay, I do not have any Intel. Let's see, 93.61.
XPON.
All right, so $4,
XPON. SNXX.
$3 above the 10 EMA. So that's a little bit elevated.
SNTG.
Do I want to do this now or do I want to wait?
FNGR. KXIN.
SNTG.
FNGR.
Okay. So this is a good strategy. I love using the 60-minute chart for swings. Okay, we can see Michigan sentiment 51.7, marginally higher.
PT.
Comes in
NGR.
SND.
marginally higher.
SNDU.
57,
SNXX.
51.7
MSTX.
versus
XPON.
forecast 51.
FNGR. MUU. MULL.
FNGR.
FNGR halted to the upside.
XLAB. KXIN.
Okay, so that should be bullish. That would be viewed as bullish. Intel
LGPS.
using the 20 EMA on the 60-minute time frame is a good way to swing. You could look at the daily.
MUU.
Okay, daily doesn't tell you a whole lot.
KXIN.
Daily just tells you, okay, this is a double bottom.
WC.
Looking at the weekly,
RMG.
okay, we could hold this level. We could move lower. If you're a short-term swing trader, though, you want to pay attention to the 60-minute 20 EMA. Get it as close as you can towards the 20 EMA. Once it turns the corner, that's a valid signal. It's bullish. It's above yesterday's high right now.
SWVL.
MSTZ.
CYAB.
Okay, Intel's above yesterday's high today. That's a bullish signal.
CYAB.
ESQL.
JDST.
Okay, Intel.
DUST.
All right, I'll look to get into some Intel here shortly.
WVL. CYAB. TNON. SWVL.
XPON. CYAB.
CYAB.
Okay, this looks good. Turning the corner. Okay, New York Fangs look pretty good. So if the New York Fangs are working, let's see, the 60-minute.
GDXD.
Okay, this is a pretty good signal for the New York Fangs as well. If we can keep up this momentum,
CYAB.
keep the buyers coming in, this should be helpful.
CYAB.
New York Fang.
XPON.
Okay, New York Fang is at a triple top high.
BJDS.
We need to break through.
DUST. MSTZ. JDST.
CYAB.
DSL. SMST. CYAB.
CELU. SWVL.
GDXD.
All right, New York Fang, 60-minute 20 EMA. Once it turns the corner, moves back, changes trend,
DSL.
changes direction. Your best entries are near the 20 EMA.
May resume in less than a minute.
It also gives you a good signal. And right now we're watching for this to push higher. potentially break out above these highs, 18,904. RSI rising, MACD, momentum is clearly bullish. Daily squeezing. All right, so what we'd like to see, obviously, what we would like to see is this turn up
WHLR.
and this one turn down, okay? If we can get that and markets move above this level, we should have a good September. Now, I'm not anticipating it. It's going to happen today, but, you know, we could. Now, the other thing is, the caveat is that we talked about September's going into a midterm election. You have to be aware. Don't get caught flat-footed. Be aware. We could do some put structures like put flies or whatever. You know, longer dated put flies. This is what the midterms in 2018 looked like. There's a lot of similarities. Okay, but note the high came in September. Okay. September, and then things get really nasty in terms of ads on TV and people and protests and everything else. Should get pretty crazy. So September, we got to be aware of it. We'll keep track of it on a live broadcast and on the weekend videos. We'll apprise everyone of anything that would suggest that we're going to see a big pullback. New York Stock Exchange, notice it's consolidating. When you're in doubt, check the New York Stock Exchange. S&P is still drifting lower. We have no iron condors on, so right now I'm not even paying attention until after 10 o'clock. Okay, Warsh is speaking now.
Well, token prices for older models fall to the level of their marginal cost. Well, we'll be thinking through these matters with the help of a task force on productivity and jobs. My early check-ins with the leaders of that task force and the rest have been very encouraging. To be clear, though, their recommendations will come later, next to these same and its substitutes. As our task forces go about their work, as you might know, I'm not waiting to introduce innovations at the Fed to help make us fit for purpose. To highlight one example, I've set out to change the form and function of the Fed chairman's so-called forward guidance. You might know about my long-time discomfort with early pronouncements of future policy decisions. I much prefer another path, and now we'll make the case for it. Transparency in communications about future policy decisions is not an end unto itself. Communications must be in service to the Fed's paramount responsibility. What is that? That's getting policy right. Forward guidance as a regular practice was adopted by my colleagues and me during the global financial crisis. It was essential at the time, and we introduced it with much fanfare. But as with other legacies of crises past, I believe the practice has outstayed its welcome. In normal times, the role of forward guidance should be limited and circumscribed. Otherwise, it risks creating ambiguity in the name of clarity. Oversharing policy deliberations and overcommitting to future decisions can lead markets, businesses, and households astray. And I believe when policymakers make quasi-commitments on interest rates throughout the cycle, we inhibit our own freedom to make the right calls when it's time to decide. To get policy right, we also need to get the relationship right between the central bank and financial markets. The Fed needs clear market signals as unfiltered as possible from market internals, from the level and change in asset prices across sectors, the prices and trading volumes of treasury securities, the foreign exchange value of the dollar, the cost and availability of credit, broad set of commodity prices. These and other indicators should inform the Fed's near-term outlook on economic activity and inflation throughout the business cycle. They should also reveal the state of broader financial conditions and the risks and uncertainties of the financial cycle. At the same time, market participants themselves should be tracking real information about the real economy. They should draw their own conclusions, form their own expectations, things like output and employment and inflation. And they too should stay sharply attuned to risks. In my view, the Fed should be humble and never naive. The Fed plays an essential role in the economy and markets. Our tools are powerful. We determine the path of short-term interest rates, and market participants will always try to anticipate what we will do next. But we should not indulge a regime in which market participants are looking primarily to the Fed for their next trade. The economic literature has long described the distorting effects, what it called the Hall of Mirrors problem. If markets rely materially on the Fed's guidance and the Fed relies on market prices, we're more likely to be blinded to new developments, more likely to be caught unprepared, and more likely to commit errors in policymaking. Now, perversely, market participants are unlikely to bear the biggest costs of the Hall of Mirrors problem. Most serious harm is likely to befall those without any financial assets. If the Fed gets inflation wrong, judges the economy wrong, gets the worst of it, not the financial high flyers. Hardworking Americans are the ones left to deal with inflation that's too high, or jobs that suddenly appear less secure. So, if forward guidance is ill-suited to normal times, how about the new Fed chief commits at a meeting just like this to some explicit reaction function? Surely he could tell us his interest rate if, say, the data were to come in hot or cold. Well, I wish our understanding of the economy were so precise as to provide a mechanical, tried and true answer. And some simple function, like a Taylor rule, could be rigorously relied upon. But our knowledge just does not extend that far, at least not yet. And other factors most relevant to the proper conduct of monetary policy, they change over time. Providing forecasts to illustrate the Fed's reaction function works better in theory than in practice, better in the lab than in the field. I am not alone in noticing that forward guidance in 2021, to cite just one example, might well have slowed the policy response to high inflation. In my term as chairman, my colleagues and I will endeavor to construct more reliable models, more robust rules, and we'll do this knowing that accuracy in forecasting is still just an aspiration. With so much changing so fast, our geopolitics, global supply chains, technology, it's wise to be modest.
Coca-Cola trying to break out.
Cannot know as we sit here today. In the same spirit, we should receive the full range of ideas on matters that may inform the Fed's monetary policy discussions. If the aim is optimal decision-making, and it should be, we should not crowd out views on the economy. How then to chart a better path to policy? In the balance of my remarks, I will share with you some key principles that guide my thinking on the appropriate conduct of monetary policy. And then I'll offer my promised assessment of the economy. So let's turn first to principles. First, I've noticed in this line of work, yesterday's news has a way of getting mistaken for what's happening right now. The challenge is to know the difference. In other words, we must interrogate reality. Make sure we're not setting forward-looking policy based on stale or inaccurate data. Nor should we rely on isolated data points. Trends matter most.
GLL.
The Fed's a decision-making agency. We make choices amid uncertainty,
NCP.
and the data upon which we draw must be relevant, contemporaneous, accurate, and as actionable as possible. Second principle. The Fed's actions are intended to ensure that the aggregate demand side of the economy is broadly consistent with aggregate supply. However, all we observe directly is activity. We never see and can only infer what's really happening on the supply side. Hence, evaluating the current and expected balance between aggregate supply and aggregate demand is imprecise.
CYEB.
Third principle. There should be no misunderstanding. The Fed's price stability objective of 2%, as measured by the PCE price index, is a firm, fixed target. Let me be equally clear about another aspect of this objective. Price stability is not self-executing, nor is inflation necessarily mean reverting. It's the Fed's job to deliver stable prices, no excuses. Fourth principle. The Fed also bears responsibility for maximum employment.
XLEB.
Achieving both sides of our mandate over the medium term is not an either-or proposition. I do not believe the Fed's dual mandate works at cross purposes. After all, high inflation itself is very harmful to economic prosperity. Fifth principle. Short-term interest rates are the predominant tool to achieve the dual mandate. Unconventional policies to spur economic activity may suit genuine crises, of which we all have much experience, but they should otherwise be used sparingly, if at all. Sixth,
XPON.
money matters. I know it's not fashionable these days, but my view is that money has something important to do with monetary policy. We should pay attention to money created by the central bank and
Hallelujah.
money that comes from the banking and financial system. It's true that financial innovations, subject of this conference, and other factors alter the mechanics that link the monetary base, the velocity of money, and the broader economy. But that is scarcely a reason to ignore the ultimate effects of money on financial conditions and prices. Finally, a quieter Fed, a more purposeful Fed in its communications, is better able to meet its objectives. And we can be held accountable for delivering on our remit, the only true test of our credibility. To borrow a line from General Chuck Yeager, at the moment of truth, there are either reasons or results. So having heard a little bit about AI, general purpose technologies, having heard a little bit about the next policy conjuncture, a little bit on principles, let's turn to the economy today. Given those principles, how do I read the economy? What's really going on outside the window? It's a little ironic. There are no windows in this room, but there are big ones at the Federal Reserve.
Amazon trying to break higher.
We've been using those in my first 100 days, and I expect we're going to continue to use those in the period right ahead of us. Now, you may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable, output solid, but inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given
Amazon above the opening range
supply
and
chains,
pre-market highs.
geopolitics, before deciding whether a change in interest rate policy was advisable. And we expressed our joint readiness to act as circumstances, require. For my part today, as we sit here, I'm impressed by the overall performance of the economy, which appears to have strengthened. One indicator of strength is how well an economy holds up under stress, how well it holds up under shocks. On that score, both Main Street and Wall Street have been remarkably resilient.
Several other observations. Business CapEx is rising rapidly. The 4-quarter change in investment in equipment and intangibles has been around 9%, its highest growth rate since 2021. And more than half of the CapEx growth can likely be ascribed to the build-out related to AI. What about profits? For the firms in the S&P, profits have grown more than 20% over the past year alone. Profit margins are quite elevated relative to history. Overall equity market volatility quite low. We're staying keenly focused on market internals, watching performance across sectors. Expectations for both growth in CapEx and corporate earnings are running quite high. Continue to watch the change in the growth rates, second derivative. Follow-on effects on asset prices, business confidence, consumer incomes and spending are equally important to gauge.
NCPL.
Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages. And issue volumes this year, quite strong. Looking beyond fixed income markets to the banking business. In the July so-called SLOOS survey, banks tell us that standards for C&I loans are on the easier end of their historical ranges.
NCPL.
It helps explain their growth that we've seen this year in these loans.
Amazon going some more.
Credit and loan markets are showing few signs of policy restraint. Now, certain sectors like housing and agriculture are showing strains, but on balance, I would be hard pressed to describe broad financial conditions as restrictive. Real consumer spending has been healthy despite increasing more than 2% over the past 4 quarters. If you combine consumption with the brisk investment we talked about earlier, private domestic financial purchases have also risen.
FOUR.
These purchases have increased at a pace of nearly 3% or so far this year. That's a measure that typically carries more signal than GDP. The trend here too, positive. So on the employment side of the Fed's dual mandate, the country's doing well. Labor markets are quite stable. The jobless rate at 4.1% remains low by historical standards. It hasn't changed much in a couple of years. Unemployment claims on a 4-week moving average, an empirically robust real-time indicator, are near their lowest level in decades. In my view, the relatively low turnover in today's labor market is partly a result of the significant rematching between employers and employees that happened in the post-pandemic environment.
NCPL.
But when labor supply is barely growing, monthly job gains are naturally going to run low. There are always areas.
All right. So far, Warsh has been speaking, and the markets have been moving higher. Well, markets like what he's saying. Amazon pushing a bit higher. Netflix breaking higher. Amazon, Netflix.
I believe the labor market is broadly consistent with full employment.
NCPL.
But on the price stability side of our mandate, the numbers are more concerning.
Amazon above opening range high.
Inflation, the one I talked about earlier. The 12-month change in the PC price index stands at 3.7%. The 6-month change a little
KXINA less
above 4.
than 10 seconds.
The comparable measures from the CPI index are also elevated. That's our core measures, both of PCE and CPI inflation. None of these measures are perfect,
NCPL.
but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place. We also want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress over the last couple of years has been more modest. And while this summer's PCE and CPI readings were better than expected, they do not tell me that underlying trends have meaningfully improved. The data also show moderate wage growth. But in my view, when tracking underlying inflation, wage growth has not proven a reliable indicator of future inflation for a very long time. So to try to gauge underlying inflation, I want to tell you about a couple things I've always looked to. I find it instructive to disaggregate the 199 individual components of the PC price measure. Over the last 12 months, 54% of goods and services in this basket showed price increases above 3%. This is well below the post-pandemic highs of about 77%, but it remains well above the level of 32 in a couple of the decades that preceded the pandemic. Looking over just the last 6 months, the conclusion is similar. 49% of goods and services in the PC basket showed price increases above 3%. And this is well below the post-pandemic highs, still elevated, quite elevated. The recent rise in overall commodity prices also bears watching. What we need to judge is whether the trends we see indicate upside inflation risks. Now, it matters too whether the inflation readings of the past 5 years have seeped into expectations. The good news is that measures of inflation expectations in the medium term, by and large, look stable. And inflation compensation measures from the swaps market send a strong and similar message, especially in light of recent developments. It's a credit to the Fed as an institution, consistent with the best of the Fed's traditions, that market prices show confidence that we will deliver price stability. And I can assure you, they're right. The thing about market measures of inflation expectations in economic history, I know some economic historians in the audience, is they all tend to look really strong and durable until they don't. These expectations are not pushed around easily. And right now they are very well anchored. But they must be closely minded. And it's the Fed's job to make sure that inflation expectations do not get unanchored. Now, there is one signal nobody can miss. Responsibility for 65 months of sustained elevated inflation sits squarely with the central bank, and that's where it belongs. So here is my statement. We must be confident that underlying inflation is moving to our objective clearly and at sufficient speed. Otherwise, we have work to do. That's our job, that's our mandate, and that's our charge to keep. So I've covered quite a bit of ground in the last 25 minutes or so. Let me see if I can conclude this way. I stand here today committed to a discipline, not a decision. My Fed colleagues and I are hardly the first to hold these positions in a time of great consequence. We are determined to redeem the time by doing our very best work. For those of you that know us, you'll know the following is true. We take our responsibility seriously, with humility, and with resolve. We know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy. It helps to secure America's leadership. And I know that our country needs us to think carefully and wisely, perhaps now more than ever. It's a tremendous honor to serve once again at the Federal Reserve. I'm truly grateful for the encouragement, good counsel, and warm reception I've received in my first 100 days from my colleagues. I'm also honored and grateful for the views that I've gotten, solicited and unsolicited, from so many of you in this room. For that, and for your kind attention this morning, I say thank you. Let's get on with the rest of the program.
The Fed Chair, Kevin Warsh, expanding on some of the principles at the Fed that he's already hinted about, but most importantly, in his speech there about 25 minutes, saying that although some of the inflation readings this summer have gotten better, quote, they do not tell me that underlying trends have meaningfully improved. More concerned about price stability than jobs. Hard pressed, he says, to say that financial conditions are restrictive. 2-year does bounce to 4.32. That's the highest since July. 10-year also bounces a bit to 4.7. Let's bring in former Fed Governor Randy Kroszner and our Steve Weissman. Steve, some initial thoughts from you.
Well, I'm going to say that it seems like Kevin Warsh met his critics halfway here. And by that, I mean, let me just set the stage here. He was criticized for not providing his reaction function, how he would react to data that came in. I'm going to say here now, Carl, my initial reaction to the speech is he provided the functions, though he refused to still provide the reactions. And by that, I mean, he gave us a whole series of data points that we hadn't heard before, things he's looking at. PBFP, private domestic final purchases. He's looking at credit spreads. He's looking at the second derivative of change of earnings. And he's giving it.
Weissman, you're tired.
Led by the short end rising here, and we did actually see traders shifting the possibility of the Fed rate increase in.
Okay, Microsoft looks good. All right, all the New York Fangs look pretty good here, actually. New York Fangs look good.
Thank you so much for your time. What were your biggest takeaways from Mr. Warsh and what he just did?
What was innovation and policy will help bring inflation back to target. But then he admitted that the economy is changing faster than the old models can comfortably explain. AI could raise productivity and inflation, but we don't know yet how large the gains are going to be or who will receive them. And because the Fed doesn't know that picture either, should overpromise and have for interest rates. He wants to acquire a more modest Fed. You know, so but also if big supply side Fed, right? Labor force growth this week, and so if the economy is going to keep growing without generating more inflation, productivity has to do more of the work. AI being the obvious candidate, right? We're seeing the investment movement, but we're not seeing the productivity thing just yet.
Well, that's it. It's interesting. He sort of started off by talking about AI, LLMs, and tokens. I mean, that was a very different speech to perhaps what we're used to. And I guess he has to touch on it because he has been quite explicit in talking about the US being on the precipice of this sort of productivity boom that's sort of been led by AI, which he ultimately thinks will be deflationary. But as you mentioned, I mean, he talked about the implications of this capital for monetary policy in the future, but he did talk about the unknowns and a big question mark as to when we would start to see that productivity. What does that signal?
Yeah, we're not really seeing it yet, right? The economy is
All right.
I would call it 2 speeds.
All this analysis of what he actually said and what they think he said and the implications. Oh, boy. Not very helpful. Let's look at Apple. Apple back above VWAP. Pre-market highs right here. Apple looked pretty good this morning. There's your opening range high overhead. Bollinger Bands are opening up. So volatility is starting to expand from a contraction and consolidation over the last several weeks. So I would think that this is going to continue. Bollinger Bands continue to open up. S&P 500. Okay, we're range bound. We didn't take an iron condor today. Let's look at hedge flows. Hedge flows. Okay, you can see that's pretty much at resistance, or will meet resistance, I should say, at 77.50. So that's just overhead. We're at 77.37. Possibility we get to 77.50. We were looking to get to 77.50 yesterday. Frano mentioned it. But anyone who was involved with the S&P wound up taking profits shy of 77.50 yesterday. Netflix pushing a bit higher. So let's see what, that's non-0 day, sorry. 0 day, pretty much the same thing. Same level. 99 percentile at 77.50. So right now we're just kind of chopping around. S&P 77.50 is resistance for now.
SNXX, SNDG, MUU, MULL, KORU.
All right, so we got 0 day,
May rise in 10 seconds.
99% right overhead. 13 points to go. Okay, if we get there, we might get rejected.
XTNT.
APPX.
Okay, Apple turning back up. Apple's turning up again. I know Mondo's trading Apple. I have a position in Apple. Looking for this to go higher. Take out the opening range high. These Bollinger Bands are signaling. Looks good.
PURR. USDE.
FNGR.
XXRP. APPX.
AREN. XTNT. WCT. FNGR.
PURR.
All right, S&P probably going to stay in a range. The high is going to be 77.50, I would think. Apple turning back up. Apple looking good.
NCPL.
My wife's yelling at her. Can hear my wife yelling at her mother.
PURR.
My son said Russians argue like that, Papa. He understands Russian. I don't speak it.
SOLT.
He says it always sounds like they're arguing, but that's the way they talk. That's pretty funny. S&P is rising up. We do have call flies. Okay, we have call flies for Monday. If this gets anywhere near 780, that'll be good for these SPY flies, call flies. Okay, if we start to edge up towards 780, I think we're going to stay in a range, though. Looks like we're going to stay in a range. If you're buying the high of the day right here, probably going to roll over. Netflix looking better. I do want to sell. Let me see Netflix. I want to see what their implied vol looks like. Netflix.
XRP.
Netflix is still over here. Pretty expensive, huh? Netflix says 1 month IV at 22.36. That's actually very cheap relative to its history. Risk reversal 87.2%. Buying put spreads on Netflix.
REAX.
Not sure exactly how they have this set up because a lot of times we'll look at call spreads when it's
TCT.
implied volatility is low and it winds up doing just fine. All right, there goes Amazon. Amazon breaking out now. Okay, Amazon is right there. Pretty cheap IV as well. All of these on the right side suggest they should move to the left eventually. Eventually being the operative word. Here goes Netflix. Netflix, Amazon, Apple turning back up to the highs. Amazon, orb signals.
AXIN. AREN.
Okay, 7750 is probably going to be resistance on the S&P, so I'm not going to chase any S&P up here. I'll be looking to take some puts maybe.
AREN.
APPX. SUJA.
FNGR. AREN.
Amazon doing well off the lows. All right, let's get Discord up and running. Pulse alerts, Discord.
FNGR.
All right, okay. Finally, they stopped talking about Warsh, like they know what's going on.
APPX.
He basically said that you know, giving you forward guidance is kind of stupid because we don't know what's going to happen to a certain degree in the future.
DFDV.
You know, we do know that printing money creates inflation,
AREN.
and the Fed's been pretty bad about that, printing money way more than we needed. Money, M1 and M2 getting crazy. All right, Amazon, there goes Apple. Apple going here.
APPX.
Apple going.
NCPL.
Okay, Apple looking good.
XTNT.
DFDD.
FNGR. AREN.
Apple trying to break out. It's above the 315 call wall.
Spider Pulse, long dated.
XTNT.
SKHX. SKUU.
AREN.
DFDV.
Tesla Pulse,
SUJA.
Apple,
zero DTE put,
Amazon,
zero DTE. Call
260,
zero DTE.
AREN.
Call strip.
260.
Zero DTE.
DFDV.
Put strip.
APPX.
Q's Pulse, long
SKHX.
dated. Q's Pulse, long dated.
DFDV. APPX.
Zero DTE. Put strip. Size. Zero DTE. Put strip. Size.
All right, there goes Apple above the call wall.
Q's Pulse, long dated.
All right, there goes Amazon. There goes Google. All right, we're starting to see some Nice action here. New York Fang components.
NOWL.
Okay, New York Fang should be pointing higher.
SPX call. 0 DTE. Call strip. Size. Apple pulse.
Okay,
Long dated.
New York Fang, we showed you this a few minutes ago. Okay, breaking higher. Okay, this is what we're looking for. New York Fangs.
AREN.
Zero DTE. Put strip. Size. 0 DTE. Put strip. Size.
They're still yelling at each other. Okay, New York Fangs.
0 DTE. Put strip. 0 DTE.
All right, looking good.
Size. Holy
We're above the Apple call walls and Amazon call walls. A lot of these are moving. Oops, wrong room. Sorry about that. Money Magic.
AREN.
0 DTE.
Let me delete this.
Size. 0
NCYL.
DTE. Put strip. Size. Zero DTE. Call side. Size. Zero DTE. Call strip. Size.
AREN.
0 DTE. Put strip. 0 DTE puts. Size.
NCYL.
Okay, nice move there. Amazon, Apple. Amazon, nice move.
0 DTE.
Microsoft breaking out too. Microsoft.
NOWL.
0 DTE. Put strip.
APPX.
Size. Spider pulse. Long dated.
Microsoft next.
Zero DTE. Call strip. Size. Holy cow. SPX.
AREN.
0 DTE. Call strip. Size. Spider pulse. Long dated. 0 DTE. Call sign.
NOWL.
Size. Spider pulse. Zero DTE. Put strip. Size. Amazon pulse. Long dated. Deep calls. 0 DTE.
FPL.
Put strip. Size. Amazon pulse.
METU.
Long dated. Deep calls.
AMCU.
Amazon pulse. Long dated. Deep
NOWL.
calls. 0 DTE. Call strip. Size. Holy cow. SPX put.
Okay, looking good.
APPX.
Avgo Pone. Long dated. Bitcoin Ponzi pulse. 0 DTE. Put strip. Size. Salesforce pulse. Long dated.
METU.
Deep calls.
NOWL.
Apple pulse. Long dated. Nvidia pulse. Long dated. 0
Okay,
DTE. Call sign.
Microsoft looking good.
Nvidia pulse. Long dated. 0 DTE. Call strip. Size. Beta pulse, long dated. 0 DTE put strip. Nvidia pulse, long dated.
METU.
0 DTE put.
AREN.
Side. Zero DTE.
Markets are doing well.
Side.
FBL.
AREN. FNGR.
SPX.
METU.
0 DTE. Pulse. Side.
All right, New York FANG looks good. Microsoft, everything's taken off to the upside. There goes the S&P.
PD.
S&P is working. Why am I not getting any? Okay, so we'll be heading towards that 780, looks like. We have call flies that'll do well. I will take those off. I won't wait until Monday. If we get close to 780s, I will take some of those off and keep some on in case we move higher towards that center strike at 790. Have the call flies. You already know about that. Okay, Apple looks good.
Long dated. Deep calls. SanDisk pulse. Long dated. Deep calls. 0 DTE. Call strip. Size. Holy cow.
WDAY.
SPX put.
Apple, let's see, Apple. Okay, just turning the corner, Apple 20 EMA strategy.
FBL.
60 minute.
Zero DTE puts. Size. Zero DTE put strip. Size. 0 DTE call side. Size.
AMCU.
0 DTE puts.
All right, there goes Apple breaking out to the ups. There goes Apple.
0 DTE call strip. Size.
APP.
All right, we're going to take out the 320 call strike, wall here shortly.
NOWL. METU. APPX.
0 DTE put strip. Size. Zero
NOWL.
DTE puts. Size.
All right, New York FANG's looking really strong here.
Holy cow.
Okay, Amazon is ripping, changing direction.
METU. FBL.
Soft pulse. Soft pulse. Long dated.
APPX.
Soft pulse.
APP.
Long dated. 0 DTE
NCPL.
size. 0 DTE put strip.
METU.
Size. 0 DTE puts. GOOG, not the L kind.
Amazon looks good.
0 DTE. Call strip.
Change of trend. 20 EMA is your strategy, your trailing stop. Okay, Apple going. Okay, looking really good. For those of you who got into Apple early, like Mondo, I've had a position in Apple, so I didn't do anything else. But Microsoft, we got in on the dip yesterday, looking good.
Zero DTE. Put strip. Size.
CRMG.
Bitcoin Ponzi Pulse. Long
FNGR.
dated. Q's Pulse. Long dated. Deep calls. Q's Pulse. Long dated. Deep calls. 0 DTE. Call strip. Size. Holy cow. SPS.
WCT.
Q's Pulse. Long
WCT.
dated. Deep calls. Bitcoin Ponzi Pulse. Long dated.
All right, what's Taiwan Semi doing? Taiwan Semiconductor.
Shenanigans.
Okay, turning the corner, needs to get back up there. Apple breaking higher. Okay, above the 320 call wall, this could really rip here.
0 DTE. Put strip. Size.
WCT.
WCT.
PSQL.
Tesla.
CYAB.
Long dated. Deep calls. Zero DTE. Call strip. Size. Holy cow. SPX put. 0 DTE. Call side.
WCT.
0 DTE. Put strip. Size.
PSQL.
WCT.
CYAB.
Amazon Pulse. Long dated. 0
Microsoft looks good.
Put strip. Size.
WCT.
0 DTE. Call side. Size.
PSQL.
WCT.
Zero DTE. Call strip. Size. Holy cow. SPX calls. Holy cow. SPX puts. 0 DTE. Put strip. Size.
All right, nice ripper here. Everything is starting to go.
WCT.
Very nice day. Congratulations. Looks good. Do I want to take anything off?
0 DTE.
Okay.
Size.
FNGR. WCT.
Okay, Apple's still going here. Above the call wall.
PSQL.
Okay, Apple above the call wall. Looks good.
DTE. Call side. Size.
Bollinger Band's opening up. We should see a continuation.
0 DTE. Call strip. Size. 0 DTE.
Oracle, nice reversal, pushing back up. Oracle. SK Hynix was down. It's now green on the day, red to green. SK Hynix. Apple still going, looking good.
0 DTE. Call side. 0 DTE. Put strip. Size.
All right, a little bit of profit taking there, Apple.
Holy cow. SPX call. 0 DTE. Call strip. Size. 0 DTE. Put strip.
PSQL.
Spider pop. Long dated. Micron pulse. Long dated. Micron pulse. Long dated. Deep put. 0 DTE. Put strip.
AMCU.
0 DTE. Put. Size.
Those call flies are up a lot.
VIX pulse. VIX pulse. 0 DTE. Call strip. Size. Holy cow. SPX call. Micron pulse. Long dated.
AMCU.
Deep call.
So much for 7750 resistance, right? All right, these are coming in now 99% at 7780 and 7790.
Zero DTE. Put strip. Size.
AMCU.
NVIDIA pulse. Zero DTE. Call strip. Size. Holy cow. SPX calls. Soft pulse. Long dated.
Apple,
Soft pulse. Long dated.
WCT may resume in less than a minute.
Call side. Size. Apple pulse. Apple pulse. 0 DTE. Put strip. Size. NVIDIA pulse. Long dated. Shenanigans. Marble pulse. Long dated. Apple pulse. Long dated.
AMCU.
Holy cow. SPX calls. 0 DTE. Call strip. Size.
WCT may rise in 10 seconds.
SPX.
Amazon's still going.
WCT halted down.
0 DTE. Call side. 0 DTE. Put strip. Size. 0 DTE. Put strip. Size.
GGLL.
Soft pulse. Bitcoin Ponzi pulse.
AREN.
Apple at the high.
0 DTE. Call strip. Size. Holy cow. SPX calls. Holy cow. SPX put.
NOWL. AMCU.
SPX pulse. Long dated.
AREN.
GGLL.
Amazon looking good.
0 DTE.
Amazon continues above the call wall.
0 DTE. Put strip. Size. 0
INTU.
DTE puts. Size. Bitcoin
Wow.
Ponzi pulse.
Nice move on Amazon.
LITZ. NOWL.
Meta
GGLL.
Pulse. Long dated.
AAOC. AMCU.
Cow. SPX calls. 0 DTE. Call street. Size. Holy cow. SPX put.
Amazon still moving. Opening range breakout signals.
NOWL.
Exceptional move here on Amazon thanks to the overall market. 60-minute 20 MA suggests staying with this one for a while.
GLL.
Q's pulse. Long dated. 0 DTE. Put strip. Size.
Netflix at the highs.
LITZ. CRMG.
Holy cow. SPX calls. 0 DTE. Call street. Size. Holy cow.
NOWL.
SPX.
Apple trending. 20 MA has started turning up over the last couple of weeks. Amazon, trend break. Google needs some work, but is trying to turn. Trying to turn here.
Soft pulse. Long dated.
Looking for Amazon and the rest of these to turn up.
DTE. Put strip. Size.
NOWL.
Google. Okay, Meta's starting to move too. Meta never did get back into Meta. We were looking for this to continue over the last few days. This is looking pretty good for Meta going forward. Meta, I didn't add, did I? I didn't buy any Meta. I don't think so.
Deep.
No, I didn't. Okay,
0 DTE. Call street.
it's all right.
0 DTE. Call street. Size. 0 DTE. Put strip.
IREZ.
SPY.
Micron pulse. Long dated. Deep calls.
ESQL.
WCT may resume in less than a minute.
0 DTE. Put strip. Size.
AREN.
Amazon still rising. Apple at the high of the day. Amazon changing trend. Amazon
IREZ.
on the move. Amazon looking really good.
DTE. Call street.
GGLL.
Size.
CRMG. WCT may res in 10 seconds.
QNM.
Microsoft pushing. We've got the December calls on Microsoft.
AREN.
Plenty of time for that one to work.
Shenanigans.
ESQL.
0 DTE. Put strip. Size.
All right, S&P is returning back to earth now. Rejected at the highs.
0 DTE. Size.
QNM.
0 DTE. Call street. Size.
Remember, core 1M is pretty high, so people are chasing. People are chasing
Vaulted down.
right above 8. Below 8, you can tell that people are buying calls, so
Apple pulse.
wouldn't be surprised to see a little pullback here.
0 DTE.
S&P
Size.
moving back towards support now. 0-day. This area built up earlier,
0 DTE.
and then we jumped above it
Size.
after Warsh. Now the 77.80 and 77.90 are resistance levels.
Amazon pulse. Long dated. 0 DTE. Call strip. Size.
PSQL.
0 DTE. Put strip. Size. 0 DTE. Put strip. Size.
They had a great result in terms of their price action after. I think it's a very healthy development. It's investors actually underwriting the spend. And I think we need that this will produce the markets right now because not all CapEx is created equal. We're kind of past this initial phase of spend everything you got and, you know, the demand will come. Now that we're in the productivity part
Zero
of this
DTE.
story,
Call
we need to start
Stop.
talking
Starting to see a little profit taking at the highs.
how is that CapEx going to drive the ROI of AI?
So then where's the right place to invest? If that's where you're looking for growth right now.
So we really like the chips and shovels trading, and with that, look all the way down the
Zero
supply chain,
DT.
look past even
Stop.
NVIDIA to some extent.
Zero
Like
DT.
NVIDIA, and look at who NVIDIA
Stop.
is using to build their components, which is really in South Korea and Taiwan. It's SK Hynix, it's CSMC. These are names that traditionally actually have
S&P pulling back now.
because the demand
IRC.
and GPUs was just shot up so much that if you would have been their, you know, amazing earnings call and said, hey, our margins might take a very small hit to like 71, 72%, because even if we don't pass almost
ARMG.
0 DTE. Call strip. Size.
in the supply chain.
NVIDIA points. Long data. 0 DTE.
Okay, we're not too far off of the
0
all-time highs now
Size.
on this move. Looks pretty good.
Long data. Long data.
New York Fang components.
0 DTE. Call. Size.
New York Fang index continues to push higher. Let's take a look at the equal weight index. Removing the weight of the big tech names really isn't moving that much. Very interesting. 60-minute 20 MA is trending and then flattened out over the last several weeks.
0 DTE.
ARCA institutional index. This is 75 stocks that institutions commonly hold in their core portfolios. That's trending, broke the downtrend. NVIDIA is not doing much here. A little bit disappointed that NVIDIA is not participating. It's fading from the highs. Apple's still up. Okay.
IRC.
Google,
Long data.
Amazon, Apple. These are all looking good. App loving today. App loving. Reversing. It had been lower. Starting to turn the corner. Back into this Kirby over here on the left. ServiceNow, that's been active lately. ServiceNow breaking out. CRM broke out yesterday. I exited my position that I'd been sitting in since March. Added to another
Long data.
on this gap up. Wind up having to sit through all of this. Got out yesterday at $7.10. cost us $2 to get in. That was a big win yesterday. Okay. Sector-wise, we lost a few. Tech is currently off a bit, 0.2% tech. Real estate looks good, XLRE. Doesn't look so hot on the daily. 60-minute, nah, not so much. It's up a little bit, 0.1%. Consumer discretionary, XLY, that's pretty good. Up over 1% on the day. Back above the 200-day, that's good. XRT. These should start catching a bid going into the end of the year. All right, SPY's turning back up. Bollinger Band's still tight. We're looking for a pop to the upside. We had a little dip right there. Looked like somebody taking profits. Financials, XLF. Financials trending a bit. Financials above its 921 day. So we want to see the banks like Citigroup, Bank of America, JP Morgan. Want to see all of these recover. Goldman Sachs, Wells Fargo, PNC. Okay, so banks look okay. KRE, KBE. Okay, looking at what's moving right now at the highs. S&P 500, Apple Oven, Domino's Pizza, ServiceNow breaking out, of course. We just mentioned that. Workday earnings. Workday looks good, holding up very well. Affirm Holdings, we had an iron condor, took the call side off. It's fading now. Took the call side off at the high of the day, basically, over here. Nice exit. SPY. Taiwan Semiconductor. Had a big trade on Taiwan Semi yesterday. 10,000 of the 380s. This is off a little bit right now, 0.5%. SPY watching for more upside. Do we retake the highs? Head towards 780. We have call flies 780, 790, 800. New York Fang looks good. Okay, Apple's turning up again. Apple. 320 call wall. Okay, Bollinger Band's opening up. Apple, Amazon. NVIDIA not looking so hot. Microsoft doing okay at the highs.
NVIDIA pumps, long dated. Zero DTE. Start.
Are we done here, or are we going to go a bit higher? Hedge flows trying to hold at the high. Net OI. 0 day. You can see 77.80 is a big level. Got support right below. 77.50. Can we get 77.80? That's a 99 percentile level, or was. $77.80, still 99 percentile. $3 billion now. All right, 77.80. Maybe we test 77.80. Microsoft, Nvidia, we need a bid. Apple's at the high, Amazon at the high, Microsoft just off the high. Meta looks okay. All right, SPY turning back up.
0 DTE put strip. Start.
BSL.
WCT.
SPY turning back up.
GSL.
Several hundred units.
Is your business mainly in China and do you have plans to expand overseas?
0 DTE.
FNGR.
Yes, our main market is currently in China because China is the richest application scenarios in the world. This means we can obtain the most comprehensive data, which allows us to
SOLC.
train better models.
BSL.
Of course, China also offers significant advantages in supply
Soft
chain and
pulse.
engineering.
Long dated.
Naturally, a globalization
VIX
strategy
pulse.
is our long-term
VIX
strategy.
pulse.
GSL.
0 DTE call sign. Size.
FNGR.
China's most valuable stock.
0 DTE puts. Size.
In first half revenue with profits also surging. The chip maker says tight global supplies of memory chips help to drive that growth. The results come just a month after CXMT
0 DTE put strip. Size.
Plus, SoftBank is seeking another 10
GSL.
0 DTE call strip.
SOLC.
FNGR.
Amazon.
AIRS. ESQL.
BSL.
Apple. Apple. Trying to push a bit higher. Apple.
CLGN.
Zero DTE call strip.
Netflix turning back up. Netflix looking better. Okay, we got to get above Wednesday's high. 82.10 is where we are now. So can we get above 82.50 or so? Netflix looking better. Tesla turning back down. Tesla and Nvidia, the only two that aren't really participating. Broadcom's kind of dragging its feet, but Netflix is good. Snowflake is good. Snowflake. Workday at the top of the list. Workday top of the NASDAQ 100, breaking higher. Workday very strong. Workday very strong here. S&P looking for more upside. Okay, I got these call flies there. Took a little hit just now, but they're starting to surge back up. So this next surge, I'll take some of these off. They dropped quite a bit, actually. Now we're starting to turn up. Looking good.
GSL. TEAM.
0 DTE put strip.
End of
Stop.
W now.
The U.S. judge ruled that the Trump administration must lift its ban on extradition payout. The judge found the ban isn't adequately justified based on the desire to make a public example out of it.
SOLC.
Apple Pulse.
FSOL.
Long dated. 0 DTE.
FNGR.
SPX Pulse. Long dated.
IRE. You're looking at IRE.
NOW now. WDA1.
Do.
DTE. Side.
FSOL.
0 DTE put strip. Side. Apple Pulse.
And that was the concern about five technology could be used for.
SKUU.
Long dated. Deep call.
Weapons deployment. The government resisted any restrictions on its use due to national security concerns. Is there any clarity on that?
Marvel Pulse. Long dated.
I mean,
Deep
I think
calls.
the one thing that there was definitely some clarity on was in like a piece of the judge's ruling. She made it clear that the Defense Department isn't prevented from taking any lawful actions that were already available to it before it set this supply chain for its designation against Anthropic. So, for
WCT.
instance, the order that the judge made the other day, it doesn't mean that the Defense Department has to use Anthropic.
0 DTE put strip.
S&P headed back up to the highs. Okay, looking good.
0 DTE put strip. Side.
Constitutional provision.
Well, speaking of Anthropic, it's among the
Back up to the highs.
that are warning that businesses and
0
governments
DTE.
FNGR.
Side.
against AI. Urging action.
So what we've seen over the last several months is there have been a handful of incidents involving some of the capable AI.
Can we break out, head towards it 780?
WCT.
Or are we going to get rejected here?
Now.
We're overbought.
0 DTE put strip. Meta Pulse. Long dated. Deep call. 0 DTE put strip. Side.
Because of that, we think that government organizations, companies,
FNGR.
defenses they have, companies are concerned that these models can be used positively, but also misused by bad actors.
WCT.
And sentences.
NOW now.
0 DTE call strip. Side.
Back to Wyoming for more on what we learned from Chair Kevin Warsh at the symposium. This is Bloomberg Tech.
All right, Apple, Amazon, Microsoft, Netflix, they're all struggling to stay at the highs right now, it seems.
WCT.
0 DTE put strip.
NOW now.
SPY looking for the breakout.
DTE put strip. Side.
WCT. FNGR.
Zero DTE put strip. 0 DTE put strike. Size.
We're right up here at the highs. Doesn't feel like we're going to push through this area.
That's no easy.
Apple's still pushing.
0 DTE.
Apple's still going here. Apple's still going.
0
It's above the 320 call wall. Apple's still going here.
NVIDIA Plus. Long dated.
IRC.
Apple's still pushing. Look for Microsoft to continue. Microsoft's been holding the highs a lot better than it had been to begin the year. We had earnings, we gapped up, and we've been showing strength. Every time it moves higher, it doesn't really fall off like it used to and close lower. Palantir, what are you doing, Palantir? Palantir is trending. Okay, Palantir looks good. Palantir still going, breaking out of this tight range. It should continue, Palantir. Let's see what the 60-minute 20 MA looks like. Palantir. $60-minute 20 MA is trending. We just came down to the 10 EMA this morning, Palantir. So we should continue, I would think. Palantir broke out of a tight range. Okay, Palantir yesterday broke out of a tight range.
NVIDIA Plus. Long dated.
Palantir still pushing, looks good.
NVIDIA Plus. Long dated. Deep puts.
NCP
0 DTE. Call. Size.
That freaking flood in Nepal, man, that is something.
Size. NVIDIA Plus. Long dated. Deep puts. NVIDIA Plus. Long dated. Deep puts. Q's Plus.
NCP
Palantir.
SPS Plus. Long dated. Deep.
Okay, Palantir. Let's see if you can keep going.
NGR. AREN.
SUNB.
WCT.
Apple still going. Amazon at the high of the day. Amazon. Okay, let me take another look at Amazon. Amazon, big move back to the 21-day center of the Bollinger Bands. Lots of volume today.
Long dated.
Looks good.
Long dated. Deep puts.
Let's see, Amazon.
WCT. NGR.
IRC.
Long dated. Deep puts.
Okay, it's above its ATR for the day. Amazon.
WCT.
Nvidia puts. Long dated.
IRC.
Nvidia puts. Long dated. 0 DTE put strip. Side.
WCT.
Amazon. Got a pretty decent amount of flow out in the October expiration.
Long dated. Nvidia puts. Long dated. Deep puts. 0 DTE call strip.
WCT.
All right. Apple, a little profit taking Apple. Not a bad idea to take some profits off. It is a Friday. Had a nice surge.
0 DTE put strip. Side.
Coming up, SK Hynix, South Korea's second most valuable company. It is laying closer ties with Japan's memory industry. We're going to more on that next.
Spider puts.
Bloomberg Tech.
WCT.
SPS puts. Long dated. Deep puts. SPS puts. Long dated. Deep puts. SPS puts. Long dated. Deep puts. GOOG of the L kind. Long dated. Spider puts.
Google looking better. Still got a lot of work to do on the daily.
Long dated. Deep calls. Micron pulse. Long dated. Deep calls. 0 DTE call strip. 0 DTE put strip. SPS pulse. Long dated. Deep puts. 0 DTE puts.
Palantir at the highs.
DTE put strip. Size.
IRDC.
0 DTE puts. Size.
LITZ.
Nvidia is still pushing a bit lower. Nvidia.
BRNX. NCPL.
SpaceX. 0 DTE put strip. Size.
What's Taiwan Semi doing? Taiwan Semi still consolidating.
VIX pulse.
Pulled back a bit.
VIX pulse. VIX banger. 0 DTE puts. Size.
S&P pulling back pretty aggressively now.
BRNX.
Holy cow. SPX puts. 0 DTE
SOSS.
size.
All right, coming into the 12 o'clock hour, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 11:41 a.m., Friday, August 28th. The Jackson Hole speech is done. Markets did initially push a bit higher. Traders taking profits off into strength. New York Fangs caught a bid. That's always good. Okay, so technically we're breaking out to new highs on the New York Fang. We have a triple top, 1, 2, 3. RSI is rising. All right, so these should still be bid into next week. I would think the way the momentum is clearly bullish. MACD crossing, stochastics turning higher, telling you that closes should occur in the upper half of the daily range. Any dips should get bought.
SMST.
Okay, so
MSTZ.
looks good. After 3 weeks, 4 weeks of consolidation, we're resuming the trend higher. I would pinpoint maybe first or second week of September. Maybe we retest the all-time highs and we have to reassess at that point. We do know that there is midterms, and the 2018 last midterms when Trump was in office,
0 DTE.
the markets pulled back 20%. So
0 DTE.
you want to get blindsided by that. Just be aware of it. We'll keep track of it as well as
0 DTE.
junk bonds,
size.
high yield corporate
Bitcoin Ponzi
are pulling back.
long dated. Deep calls. AMD pulse. Long dated.
But as he was addressing before this following event, he cast his eyes globally. He talked about the partnerships that he would like to forge.
Amazon back to the 21-day. Needs to get above. Nice reversal. Looking for a push back towards 270, 275, 280. Next week.
DTE put strip. Size. 0 DTE.
Showing lots of strength today.
Size.
MACD stochastics reset. Perfect setup
0 DTE put strip.
as
Size.
far as perfect setups can go. We got the 60-minute change in trend. 60-minute change in trend. The daily looks good. Amazon.
TSL2.
And we're trading at the highs.
WCT.
SMST.
Products that are already on shelves as a result. Those higher prices from a consumer standpoint here to stay. And that's something he talked about in general. He said that the memory squeeze that we are seeing is something that will last through 2030.
App loving, Airbnb
0 DTE put
at the highs. Airbnb, real estate doing well. Netflix,
size. Holy
Netflix.
SPX. 0 DTE put strip. Size.
Gold on the move.
Just how much demand there is, not only
Gold pulling back a bit. Okay.
MSTZ.
Meta pulse. Long dated.
no doubt, and that is happening.
Meta pulling back to below VWAP. All right, stocks are starting to fade from the highs. Gave you an opportunity to exit into strength. Apple at the high. Apple at the high of the day. Bollinger Band's expanding.
0 DTE put strip. Size. 0 DTE put strip. Size.
Why do you give them so much of that?
Size. Meta pulse.
Oh yeah, they said go get it for you. They actually said that.
Meta pulse.
That's supposed to be treats, not food, dinner.
Fix pulse.
SMST.
Apple at the highs, continuation.
Nvidia pulse. Shenanigans.
Just your shrunk. He was so little weight.
Nah. Take two.
This part.
777.
Netflix, Microsoft. Still consolidating Microsoft.
0 DTE put strip. Size. 0 DTE.
All right, so this is it's a Friday, so this is probably the highs. We've probably seen the highs so far today. Back to VWAP. We're starting to lose VWAP here. Nvidia looking terrible.
0 DTE put strip. Size. 0
All-time highs just overhead for Nvidia. You could make the case for double top in this zone. We haven't gotten there though. All right, so does look pretty bad though right now. Taiwan Semi, the chips, Intel looked good earlier. That fell off. Intel. A lot of profit taking. A lot of profit taking. Apple's still holding the highs though. One of the few stocks.
0 DTE.
One of the few stocks holding the highs. Apple.
0 DTE put strip. Size. Spider pulse. Long dated. Deep pulse. Micron pulse. Long dated. Deep calls. Micron pulse. Long dated. Deep calls. Nvidia pulse. Long dated. Apple pulse. Apple pulse. Shenanigans. Apple pulse. Shenanigans. Nvidia pulse. Long dated. Shenanigans.
Apple, nice Bollinger Band breakout on the daily. Does feel like it's struggling. Most of the components are just off the highs. RSI rising.
Holy cow. SPS. 0 DTE.
Everything looks pretty good for Apple for next week. while the S&P fades a bit at the moment. S&P fading.
Spider, long dated.
All right, I'm going to take a couple minute break. Get a little bit of sunlight on my face. And I'll be right back. All right, give me a couple of minutes. I'm going to take a break.
Soft pulse, long dated.
LITZ. IRZ. TSLQ.
0 DTE put strip. Size 0 DTE call strip. Holy cow. SPX. 0 DTE put strip. Size 0 DTE. 0 DTE. Size
LITZ. AUZ. IRZ.
0 DTE call strip. Size SPX points. Long dated.
SOXS.
0 DTE.
LITZ.
Size SPX points. Long dated. Holy cow. SPX points. Holy cow. SPX calls. 0 DTE put strip. Size 0 DTE put strip. Size
BMNZ. BEZ. MSTZ. SOXS.
0 DTE call strip. Size 0 DTE puts. Size Zero DTE space. Size. Holy cow. SPX calls. 0 DTE put strip. Size. 0 DTE put strip. Size. Holy cow. SPX put.
BEZ. CONI.
VIX Banner. 0 DTE.
BMNZ.
Size. 0 DTE. Call strip. Size. Zero DTE call sign. Size. 0 DTE put strip. Size. Holy cow. SPX put. 0 DTE put strip. Size. Holy cow. SPX calls. Zero DTE puts. Size. 0 DTE call strip. Size. 0 DTE call strip. Size.
BMNZ. MSTZ. SMST.
Holy cow. SPX put. 0 DTE put strip. Size. 0 DTE put strip.
ACM.
Size. 0 DTE call sign. 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 AMD pulse. Long dated. 0 DTE call stream. Size. 0 DTE call stream. Size.
MSTZ.
0 DTE
SMST.
call sign. Size.
IRZ.
0 DTE call sign. 0 DTE put string. Size. 0 DTE put string. Size. Holy cow. SPX calls.
NBTQ. MSTZ.
AMD pulse.
SMST.
Long dated. 0 DTE points. Size. 0 DTE call string. Size. 0 DTE call string. Size.
ACM. SOXS.
NVIDIA pulse.
NBTQ.
Long dated.
IRZ.
0 DTE put string. Size. 0 DTE put string.
ACM.
Size. Holy cow. SPX call.
MSTZ.
NVIDIA pulse.
DSL.
Long dated.
LABD.
Calls. GOOG. Not the kind. Long dated. Amazon
SOXS.
pulse. Long dated. Deep calls.
SMST.
Amazon pulse. Long dated. Deep calls. NVIDIA pulse. Long dated.
NBTQ.
Deep calls. NVIDIA pulse. Long dated. Deep calls. 0 DTE call string. Size. 0 DTE call string. Size. Fuse
LABD.
pulse. Long dated. 0 DTE call sign. Size. Marble.
AOZ.
0 DTE put string. Size. Holy cow. SPX
DSL.
calls. Holy cow. SPX. 0 DTE put string. Size. 0 DTE puts. Size. Marble.
MSTZ. SMST. NBTQ. IRZ.
Micron pulse. Long dated. Micron pulse. Long dated. Deep puts. Marble.
SOXS.
Long dated.
LABD.
Marble pulse. Long dated. 0 DTE call strip. Size. 0 DTE call strip. Size. Zero DTE put string.
MSTZ.
Size. Holy cow. SPX.
LABD.
0 DTE put string. Size. Holy cow. SPX calls. Micron pulse. Long dated. Deep calls.
SMST.
Zero DTE call string. Size. 0 DTE call string. Size. Amazon pulse. Long dated.
MSTZ.
Deep calls.
ACM. SOXS. SMST.
Ready for a total room makeover?
0 DTE put strip. Size. Holy cow. SPX put. 0 DTE put strip. Size. Holy cow. SPX calls. Micron pulse. Sadisc pulse. Shenanigans.
Today. Dreaming of life by the sea.
0 DTE. Call strip. Size. 0 DTE. Call strip. Size. Palantir pulse. Long dated.
And coastal ready designs. We offer homes for every buyer, whether it's for first-time home buyers, vacation homes, or retirement by the shore. Own land, we'll help you make the most of it. Your coastal life starts here.
Triple semi pulse. 0 DTE. Put strip. Size. 0 DTE. Put strip. Size. Holy cow.
SOXS.
SPX puts. 0 DTE. Call sign.
CHAI.
Size. Triple
TSLQ.
semi pulse. Triple semi pulse.
BMNZ. MSTZ.
Triple semi pulse. 0 DTE puts. Size. 0 DTE. Call sign.
SMST.
Size. 0 DTE. Call sign.
CHAI.
Size.
CHAI. SOXS.
Spider pulse.
TSLQ.
Long dated.
IREZ.
SPX pulse. Long dated. Spider pulse. Long dated. 0 DTE. Put strip.
PSQL.
Size. Holy cow. SPX puts. 0 DTE. Put strip. Size. 0 DTE. Call sign. Size.
IREZ.
Long dated. Deep calls. SPX pulse. Long dated. Q's pulse. Long dated. Nvidia pulse. Long dated. 0 DTE. Call strip. Size. 0 DTE.
PSQL.
Call strip. Size. Apple pulse. Long dated.
CHAI.
Apple pulse. Long dated.
Traders pricing at higher odds of a rate hike in September. We saw the 10-year bill make some big moves, but right now, not doing well.
0 DTE. Put strip. Size. 0 DTE. Put strip. Size.
You can see the 10-year bill shooting up after the text of Warsh's speech was released at 10 a.m. Eastern time. That was a 10 basis point move.
ETHD.
Warsh making
PSQL.
CPI and PPI data were not entirely encouraging. All right, let's move on to equities here. Stocks getting a little bit of a lift initially, but have now settled down.
0 DTE. Call strip. Size. 0 DTE. Call strip. Size.
In the 14.5 range, below 15. All right, let's go back to Tom in Jackson Hole. He is with one of our reporters there in Wyoming, and they're current. Tom.
Scott, thanks so much. I needed that data check, Scott, because I spent the last 30 minutes in a pioneer.
CHAI.
CHAI. ETHD.
Jackson Hole. There's been a lot of feedback. You see the 2-year yield move higher.
0 DTE. Put strip. Size. 0 DTE. Put strip. Size.
And the current that the pandemic hold up in Hong Kong, it's international economics better than anyone here at Bloomberg. How did the international community, how would you guess they did or they will respond to the Warsh speech?
I think the speech is being well received, Tom. It's been seen as clear on some critical points. The chairman's views on inflation.
CHAI.
0 DTE. Call strip. Size. 0 DTE. Call strip. Size.
CHAI.
And they made clear the near-term tool they have to control inflation is short-term interest rates. So it was a hawkish message. Of course, it sets up for how he now delivers on that.
Just as
0
aside, when New
DTE.
Zealand raises rates, do they raise rates to get out in front of a raising rates, Chairman Warsh?
sometimes it depends on the cycle. Sometimes central banks try to get ahead.
CHAI.
You could argue this time around, maybe
0 DTE put strip. Size. Holy cow. SPX put. 0 DTE put strip. Size.
Cushy job here. Christianity is actually working for a living without Federal Reserve coverage, paragraph by paragraph. Which paragraph?
0 DTE call side. Size.
Doesn't slow down quick enough. They're like, and they have work to do. So
DSL.
some calculus, the second derivative.
0 DTE call street. Size. 0 DTE call street. Size.
Thinking about monetary thinking about inflation. But again, Tom, the point is, all of that's fine. And under some of the
GDXD. DUST.
BE pulse.
Just what are you going to do about it? How do you deliver in your months ahead? The way they build global economics and our Federal Reserve coverage foundationally around Rich Martin, Craig Torres, and others, and I can take over. And the man focus reacted to this speech.
0 DTE put strip. Size. Holy cow. SPX put. 0 DTE put strip. Size. Zero DTE call street. Size. 0 DTE call street. Size.
CSL. GDXD.
CELU.
0 DTE put strip. 0 DTE put strip. Size.
CELU.
0 DTE call street. Size. 0 DTE call sign. Size. 0 DTE call sign. Size. NVIDIA pulse. Long dated. 0 DTE put strip.
CSL.
Meta pulse. Long dated. Zero DTE call strip. Size. Zero DTE put strip.
All right, Apple just kind of hanging out at the highs. Nvidia's down. Microsoft back up. Microsoft doing exactly the opposite of what it used to do. In the beginning of the year, this thing just could not hold any of the gains for the day. So that's changed quite a bit. Microsoft looking much, much better. Bollinger Bands on the daily tighten. It's breaking to the upside. So that tells you right there all you need to know. Momentum is clearly shifted to bullish. Make sure you're buying the dips, not buying the high today, and you should be fine. Buy the dips, not the rips. Give yourself enough time. We're trading December at this point. Microsoft, December. Okay, Palantir's off the high. All right, stocks are giving us B and C pivots. Let me shift gears and
DUST.
let me turn down the volume a bit. See what they have to say over at CNBC. Probably going to be talking about Warsh. And Judge probably going to be telling us all about his interpretation.
And attributed exactly half of it to the AI build out. Now that implies the other half is non-AI. And we do know from the budget bill passed last summer that there is manufacturing reshoring going on. So, you know, this is an opinion, and my opinion is that this AI
Semis are off a little bit today. Look forward to them to bounce next week. They're not going to go up every single day.
Creating undue price pressures. Now, I say that last part noting that the PCE was 3.7%, well above the Fed's target, but well below where it was 4 years ago. We're not in some hyperinflationary environment where the use of the word craze would give us reason to think that the Fed's going to go on a
S&P bear flag.
There's a balance here between the good and the positive, but I think we're sticking it. We want this AI build out to continue. We don't want it to continue at a level that causes the Fed to get super aggressive. I just don't see that happening right now.
Okay, so on the negative side of things, Jenny, we've got some commentary out of Bank of America.
Oh, good. Wapner's not on. That's good. Microsoft breaking out. Microsoft breaking out.
Sovereign consensus, no macro landing, no Fed hike, no AI capex cut, no debt sweep, no fear. Intact investors are positioned for A.
Microsoft's breaking out.
Cap bond yield, C. Run it hot on Main Street and too big to fail on Wall Street, etc., etc. This is an interesting point of view given the fact that the markets sit right near record highs and have seen that kind of steady climb higher over the course of the last several months. Is that something we have to be concerned about?
I think so, but also even more importantly than us being
Are we taking out stops or are we going to actually run this?
So I spent Monday, Tuesday, Wednesday of this week in Providence, Rhode Island, Boston, Massachusetts, and Portland, Maine, talking to clients. And they're feeling that, right? Like they can't express it the way Michael Hartnett does, but they're saying it seems unsustainable. It seems like a peak. Are we playing with fire? And what I said in response to that was, look, the market's up as much as it is because of earnings. And between now and the balance of the year, I think those earnings are kind of locked in. So I think we're in an air pocket between now and October.
Bear flag on the S&P.
Probably going to be like NVIDIA, so they're going to be excellent and they'll be what we expected. But as we think forward, I think the lens needs to shift a little bit to the reliability of earnings projections. This is what I said to my clients. I'm like, and I don't own Caterpillar, so I don't know this, but I'm like, I would be more wary and dig deeper into a Caterpillar's earnings.
More? I think that's ridiculous. That's ridiculous.
She doesn't eat anything else. I think she has problems with her stomach. If you touch her.
Earnings projections are potentially less reliable, and say, for example, than some healthcare that has skilled nursing homes and maternity communities. When we look at the balance from the year, I think we need to focus on earnings reliability and where if there is an AI boom. I agree with you, by the way. I don't like the word craze because it does seem, you know, it's a lot and the numbers are unbelievable, but it does seem kind of sensible the way
Microsoft looking good.
have the money, you know, it's companies that already have cash. So it's not just, you know, not everyone's borrowing to do it. But I think there is a boom. And if there's a boom, if any bit of that just starts to taper, because by the way, there is huge societal pressure out there to not keep building data centers. And what if the building is just slower? And what if the queues for the large turbines slows down? Are those earnings reliable?
Okay.
I think as we go into this, we just need to focus there and say,
Amazon turning back up.
Making a good point. I mean, you look back about about a month and a half, 2 months ago, we started really taking down our industrial exposure. Even before that, I think it was late May, we cut our Vertiv in half. It was a very, very high holding of ours. Because if you look at the industry, I mean, industrials are running on the AI narrative. So if we're already positioned 35 to 37% in technology, and then we got comm services out there, and then you hold overweight industrials, you're basically all AI. So that's really where it comes in. If you look at the portfolio as a whole, what stocks are you going to own within industrials that are going to be impacted? We took down our exposure quite a bit in industrials over the last month and a half ahead of earnings.
We're gonna get to some of the stock. I just wanted to bring this up because the flip side to that case that you made, speaking about the anxiety that some of your clients are feeling right now. This is coming from Goldman Sachs' Tony Pasquarello talking about kind of the market setup overall. He's saying that underlying fund flows remain solid. All right. Corporates and households are still on the bid. They're still out there buying. While the levered community has ratcheted down their exposure from now until the first meaningful wave of new issuance in September, the technicals are supportive.
Okay, we're falling off again.
Kevin, that is the setup as we see Goldman seeing it. It sounds relatively
Kicking myself because I didn't sell those call flies at the high of the day. They were up a lot.
Is that the way that you see things developing right now?
Well, I would take it one step further, and I would say the breadth that we're seeing in the market is a lot more encouraging than what might be concentrated within just the tech trade. So when Bill was talking about industrials and lightening those up, I was kind of thinking about how they've performed over the past month. And I don't even think they're in the top 5 sectors for the past 30, 60 days. So you look at this market and you see, of course, technology is leading, but you've got energy, discretionary materials. I love healthcare and pharma as well. But I think the setup is a little bit more of a broadening. If we want it to continue, and it doesn't have to be a rocket ship up, it can be a grind. But I think we need to see more breadth in this market.
Allow me to tell you why this is so important. Is because there's a lot of capital that needs to be raised, both in the primary market. We know Anthropic's coming. We know there's OpenAI next year, Anduril, the defense company, but also in the secondary market, and that's equity and debt. So far, the capital markets have said the store is open as far as funding these incredible amounts of capex that are going on. That to me would be the real risk to this whole AI build out, is that the capital markets closed. Now, in July, we know that the world underwent a deleveraging scenario. It happened in Korea, it happened here with situational awareness. That's actually a great setup. Now, I still think September is going to be volatile. I'm not expecting
S&P pulling back.
a lot of capital issuance.
Got to stop thinking about that call fly. Call flies were up so much.
Specifically to the
I got greedy. I thought we were going to push higher.
is helpful for the setup of all the capital that needs to be raised in the coming quarters.
All right, so let's talk about some of the individual names that are kind of underlying this broader story that's developing right now. Post Jackson Hole, post NVIDIA. One of them is Marvell Technology, which was a great chip stock performer. And you can see there over the course of the last maybe day or so, it's down 10%.
All right, S&P continues to head lower.
The setup was already there, and this is giving some of it back right now. Bill, you own Marvell. Has the Marvell result changed any of your feeling about how those semiconductor trades work in the coming months?
No, it doesn't. I think Marvell did not participate the day before in NVIDIA's earnings as well. And some of those names were also down. There was news on semiconductor tariffs that could potentially be rolled out too. I think that threw some cold water over names that weren't just directly connected to NVIDIA. We really like Marvell, and it's a name that we didn't get as much on when we initially bought it about a month ago at 220 or so. But you got revenue growth in data centers accelerating. Full year 27 growth expected approximately 60%, up from 50%. I mean, the thematic part of this is going to continue to grow. It's going to continue to drive the revenue. I maybe would have liked to see a bigger beat. It was just over
Apple off the high.
Same with EPS.
Market's pulling back.
I think the story here is CXL, the connectivity of these data centers. You're going to see the same way I think 3-4 years ago I was at the table with high bandwidth memory. CXL and the connectivity side of it that Marvell is driving is going to continue to expand and continue to be in the front page of the news. We look 6 to 9 months out.
Kevin, if it's not NVIDIA, because NVIDIA is its own thing, we know the story now, we kind of see the projections that they've laid out for us. Are there chip stocks that are not named NVIDIA and Marvell that you think offer compelling value at these levels?
Well, we do own in our growth portfolio AMD, we own Intel. I mean, we have a diversified portfolio there. But I mean, if push comes to shove, I don't think you need to go any further than NVIDIA. I mean, after you look at this earnings report last quarter, I mean, 2028 numbers, they're probably trading at like 15 forward. I realize that's 2028, but this thing just keeps getting cheaper and cheaper. Now, someday the party ends. All the notes earlier that we discussed, 100%. This party doesn't last forever, but I don't see the end coming anytime soon. So if I'm looking at a name, I still want to stick there and stick with best of breed.
All right. And one more point here. Cybersecurity has been a big theme over the course of the past couple of days. The reaction from some of the big names that have reported so far has been very different in terms of the way that they've responded. Jenny, I don't know if cyber is something that you would keep an eye on, but the narrative around cyber vis-a-vis AI, it's just gotten stronger and stronger with regard to capital budgeting, with regard to total addressable market. How does one get into, with a value tilt, some of these names that you know are going to be big going forward?
One doesn't. With a value tilt, one doesn't. They sit on the sidelines and let their heart get ripped out of their body. So we have technology, right? But it's actually really funny. You know how I said I was in these meetings? One of my clients who used to be a portfolio manager just loves the cyber ETF. And she was scolding me and she's like, Jenny, you know, I told you to buy that for your kids like 3 years ago. And I said, yeah, you're right. But with this value tilt, I'm always looking for it. We used to own Palo Alto. Palo Alto's got a huge free cash flow yield. I think you have to be in this space. And you know what, Don, you bring up another point. You don't need to be all in a value strategy. This is why you also have a growth strategy, because the growth strategy can access the cyber stocks. But I can't.
All right.
It stinks.
Meaty for sure. Lots of talk to talk about in the markets right now. Still coming up next, the committee's going to make its moves. Kevin Simpson's ready with a trade in one name that's up already big this year. And then later on, don't miss a first on CNBC interview. Our Steve Leisman will be sitting down with Chicago Fed President Austin Goolsbee. Must-watch interview there. Halftime is back in 2.
GDXD, DSL, JDST.
All right. Just looking to buy some Amazon on a dip. So I'm looking at the 295s for November, 295, 305 call spread. I'm not going to go out to the 350. That's ridiculous. Those are $7 each for the spread. So I'll go 295, 305, but I'm putting a limit order at 175. It's currently trading about 250, something like that. Looking for Amazon to pull back a little bit first. And I'll do that good till canceled. The 295, 305 call spread for November. And if I can get in cheaper, it's currently trading 227 now. It just dropped a few pennies. It dropped about 10 cents. All right. Amazon. I'm looking to get in a limit order. All right, so we're selling off. Low tick alert.
All right, welcome back to Halftime Report. Let's hit a few committee moves. Kevin, you bought
S&P 500 still dropping here. Oi.
This was a stock we initiated the position last week. We bought more yesterday. We actually added a little bit more this morning. Think of this as about as far removed from the AI trade or the Mag 7 trade as you can get. This is a North American producer of nitrogen. Doesn't sound all that exciting, but it's something that the administration is very much behind. Reindustrialization, bringing supply chains back into the U.S. We're not buying it because Washington likes it, but the fundamentals are unbelievable with this company. The earnings were amazing over the last quarter, great dividend, nice dividend boost. But most importantly, on a valuation standpoint, this thing is trading at about a 9 to 10 times forward multiple. So if we're looking for value in this market, I think CF Industries is something to take a look at.
Materials, by the way, is somewhat of a hotter sector right now. Bank of America notes in its flow show note to clients, it saw the biggest materials inflow going back to March. So this is not just a one specific story. Materials are getting a little bit more of a bid. Bill, well, let's take a look at some of the other names within that materials sector that you like overall outside of, say, CF.
Yeah, I mean, we run a mining portfolio focused on gold, some silver as well. I mean, it's been quite the move in gold over the last month and a half. I mean, we're coming down pretty heavy today after today's reversal. But I mean, looking at the miners specifically, the costs remain stable. I mean, the energy prices have gone up, but the costs remain stable. Output's solid. We just see significant value here. I mean, I think pullbacks, maybe not necessarily catching today, but pullbacks in general are going to be buying opportunities. And we see miners as a great alternative or a complement to bonds within a bond part of a portfolio over the next 12 months. I think that's a really great way to be looking at things. The gold names have done much better. Newmont got back to its previous highs. Didn't quite break out for today's pullback. Look at Nico has done all right. We like Core mining a lot too. So those are our three favorite names in the space.
It's interesting juxtaposed with bonds because then you've got the inflation hedge against any destruction that might happen for the bond side in case things take higher.
And I would throw midstream energy in there as well. We run a real asset alternative basket with midstream energy and mining to complement our bonds in like an 80-20 portfolio.
Okay. All right. Now let's go to our call of the day right now. We have a street fight basically on Best Buy shares after earnings. Goldman Sachs reiterates its sell rating, calling for a 14% downside, while Truist says it reiterates a buy rating, saying the stock has 20% upside. The street fight, Best Buy, consumer electronics and retail. And Jenny, I'll turn to you because you own Best Buy.
Yes, I do. And I'll lead with the most important part, which is yesterday when the stock was down 4% and change, right after they had this great earnings announcement. I bumped it up for clients who are underweight, and I bumped it up for clients who hadn't bought it yet. So I added this back in March at $65 a share. And the investment thesis was exactly what it is today, which is that as the world becomes more and more technologically advanced, and as we need technology for more and more, there's insatiable, endless demand for it. And because the price points are high, and because the complexity is intense, there will be a need for this bricks and mortar experience. Like, for example, when I bought new earbuds, I went in because I wanted to touch and feel them. I need a new laptop. I'm not buying it until I can put my fingers on the keyboard and see what it looks like and feel it. And I'll probably still order the laptop from my IT guy, but I'll go into Best Buy and I'll be sure I'll have some binge purchase on something else. So where you stand, oh, and by the way,
Best Buy is sitting on the fifth today as Jenny talks about it. Dell still dealing with that range overhead.
You got a 6% dividend yield. You have an excellent management team. You have a lot of cash generation, a long dividend history, and a real actual reason to exist. Even else, Tom, it also goes back to my earnings reliability. Earnings here are very reliable. You can look at a very long history. You can see what they do through recessions. You just need the products that Best Buy sells.
Okay, from a retail standpoint, Jim, I'll give you the last word here. Is it Best Buy? Is it somewhere else in retail that we should be looking?
I don't own Best Buy, but this looks like a great stock, frankly. And if we look at the retail reports over the last few weeks, one thing has been clear is that price matters on these stocks. You've seen Walmart give an okay report when the stock went down because it was just too expensive. We've seen that with other stocks like TJX. So look at this Best Buy. First off, the consumer is in great shape. I know the consumer feels lousy. I get it. But the consumer
Microsoft trying to go here. Microsoft is showing a lot of strength.
stocks, just figure what the market is
telling Lots of strength, Microsoft.
Cheaper names like Best Buy. Sure, it's down in the short run, but over this past year, it's had a great run. This is just consolidation.
All right, that's an interesting setup for sure there. Now let's turn to Brandon Gomez.
Dominic. I like Dominic. I wish they had him or Frank on more often. Speaking of Frank, Dr. Frank, if you're listening in, give us that thumbs up. Everything's okay. You're feeling okay?
The World Health Organization says the outbreak remains out of control. Dr. Doctors Without Borders has opened a new treatment center while Congo is vaccinating frontline workers. The current strain has no approved vaccine or treatment. Walmart has settled a Justice Department lawsuit accusing the retailer of helping fuel the U.S. opioid epidemic by unlawfully dispensing controlled substances at its pharmacies. The department said Walmart failed to meet its obligations under the Controlled Substances Act. Financial and other settlement terms were not immediately released. The federal case was filed back in 2020. In Miss Virginia, Justice Kelly has been crowned Miss USA, becoming the first mother and first married woman to win the pageant. Kelly beat 50 other contestants Thursday night in Miami. The milestone follows a 2023 rule change allowing married women and mothers to compete for the title. So big congratulations to her, Tom.
Congratulations for sure. Brendan, thank you very much for that. Coming up next on the show, Mike Santoli joins us with his midday word. Keep it right here. Halftime is back after this break.
Microsoft trying to go more. Where are we? Microsoft? Microsoft. I'm already in the money here. I'm not paying attention. Microsoft, I should take this off and roll it. Microsoft. Yeah, I have the 510, 515s, and we're up at 516 right now. I got to take some profits or roll these out. Okay.
Zero DT. Hold. Stop.
Our Microsoft looks good. Okay, don't want to do anything at the moment. Did take some profits off Microsoft, though. Need a dip in order to get in or to roll anything. We're nearing 5. Looks like it's going to keep going here. Microsoft.
Zero DT. Hold. Stop.
Microsoft. See if there's anything out in March. Microsoft breaking out again. Wow. Microsoft is kicking it.
Zero DT. Hold. Stop. Apple Pop. Apple Pop. Shenanigans. Zero DTE. Cold side. Start. Zero DTE. Cold streak. Start.
CHAI.
All right, we're back on the halftime report. That animation means it's time for senior markets commentator and overtime co-anchor Mike Santoli to join us with this midday word. We were just chatting on set, Mike, about the kind of intraday chart in the S&P 500. And it's not been massively extreme, but it does look like a roller coaster. So how exactly does that play out, given what you heard from Kevin Warsh today?
For sure, Dom, it felt like right after the speech was over, you did have this tension release, a little bit of mechanical buying, mostly because, hey, that's a big catalyst that's out of the way. The market has stayed, very well behaved up until that point. Treasury yields were not breaking out.
I think since then, it's a little more about winners versus losers and the market trying to take some shelter in this context of higher probabilities of getting a little more of a financial.
Another bear flag on the S&P.
Down the road. What that means is this market grabs for MagSep. So Apple, Microsoft, Amazon, Alphabet, they're up 2% or so. What's down? Russell 2000 down 1.2%. So that seems like this sort of rotational dexterity has not been upended yet. I do think that, we would have gotten off easy through August if, in fact, it stays this calm. But so far, that's been the response. Higher yields and macro stress has typically meant the market cannot broaden out. In fact, the majority of stocks go down. That's what's happening today. But you do have those big growth stalwarts there that are keeping things orderly for the moment.
Yeah, and the Russell 2000 small cap index kind of leading the declines today, if you want to look at it that way. Mike Santoli, thank you very much. We'll see you later on today on Closing Bell Overtime. Straight ahead on this show, don't miss a first on CNBC interview. Our own Steve Leisman standing by with Chicago Fed President Austin Goolsbee live from Jackson Hole, Wyoming. Stunning backdrop. Halftime is back after this.
All right, looking good. Microsoft looking for a follow through on the breakout. Very nice turn earlier in the week. We were looking for Microsoft to push higher. Okay, Microsoft.
SP exports, long dated, deep put.
What's today? The 28th, 26th. August 3rd. Microsoft. 21st.
0 DTE, call street. Start.
CHAI.
Microsoft looking good. Microsoft. Okay, so it looks like we're going to start to turn here. So maybe some S&P. Let's see what the hedge flows look like. Okay, not yet. Okay, so it looks pretty good though. S&P looks pretty good for a reversal, is what I was going to say. Microsoft.
0 DTE, put strip. 0 DTE, put. 0 DTE, call strip. Start. Zero DTE, call side. Start.
CHAI.
Microsoft 21st.
Zero DTE, put strip.
CHAI.
All right.
Zero DTE, put strip. 0 DTE puts.
BRNX.
Zero DTE put strip.
Okay. If it wasn't for the indices, it'd be a pretty decent day. A lot of stocks pushing higher.
Nvidia pulse. Long dated. Zero DTE pulse. Size. Zero DTE pulse. Size. Zero DTE put strip. Zero DTE pulse. Size.
BRNX.
Hi, Steve. How you doing? It was great. Love being out in the rain. Well, we're gonna maybe modify it. I'm not sure.
All right, that first voice was Fed Chairman Kevin Warsh and Jackson Hole just this past hour, making a rare stop during his post-speech photo op walk to talk with our own familiar voice, senior economics reporter Steve Leisman.
Oh.
Steve actually joins us now.
He's going to just keep repeating this. I don't want to be insulting. It just really bugs me.
This is all for businesses and personal use that will, help people utilize AI more. I don't know if they're going to compete well. I think private has the win right now, but they're all going to battle each other, and so that could be a new source of revenue coming in. And it's just another classic meta play. They've got all these different things they fire at. Some of them hit, some of them don't. But the ones that hit really pay off. And so as a meta investor, you just kind of have to take it, as part of the investment is there's going to be some shots fired that miss, but the hits are going to be great. So that's why you got to just relax on the capex and relax on everything else, because they take measured shots and they're usually like 10 to 1s, and sometimes they miss. So just hang in there, investors. That's my theory there.
All right. Brent, co-founder of Likefolio, with the latest data on Meta platforms. Now, for the trading perspective, have a good weekend, Landon. Let's bring Tom back into the fold. We got those insights from the Likefolio team. Tom, your thoughts before you guys jump into the example trade?
So I don't think it's a drop in the bucket as far as a capex spend. What's their range? Close to $130 billion in 2026. So you've got to take that into context. And, with all these large language models, is Meta platforms supposed to finish at the top? Is there going to be enough room for them? Or is it worse than Anthropic? Is it worse than Alphabet's, Gemini? You have to start thinking about these things because, they've got 3.6, billion sets of eyeballs on their platforms. They're advertising side of their business.
Microsoft looking for more upside.
This lawsuit is now in the rear view mirror. $16.7 billion they're going to have to spend, and then another $10 billion for legal fees. They said that's going to come down the pipeline for this quarter, so keep that in mind.
I'm so mad about these SPY put flies, call flies. I was up over $1,200, and I got greedy, looked away. Oh, it'll bounce. Should have just taken profits. Vinny. Keeps fading. These call flies right here. These call flies had a really nice profit. Let it slip away. Got in at 17 cents. It was up to like $35, $40 per contract at the high of the day. Maybe it does something on Monday. Or I don't think we're going to move back up to the highs from here, but definitely pretty wide range. So I'll concentrate on Microsoft, Apple, Amazon. These doing well. Markets look like they're trying to, looks like they were trying to bounce right here. Okay, we might get a bounce.
Can you adjust the strikes? Yes, of course you can. You can do that and make it more in line with the expected move. But right now, Tim, this is one that don't look at the strikes as much. Look at the shape and the idea. You're giving yourself 21 days and you're looking for $40 on the upside from wherever you pick your long delta top. But the risk is the debit paid. And if it moves towards your short strike, $40 higher, remember you're short a $10 vertical on the other side of that. You stay profitable, Tom, on one like this.
Yep, let's break this one down. And I think that's a good kind of lesson here, Kevin, because
See if we can't bounce here back towards 77.50.
this particular trade. So maybe adjusting the strikes down $5 or $10 puts you back into this, this debit that you're paying on this one because the stock has moved down. So timing critical here. But let's break down Kevin's trade. September 18th, monthly options that expired 21 days. Buy the 585 strike call one time, sell 2 of the 625 calls. That's where you want the stock to go. And then buy 1 of the 635 strike calls. You're paying roughly, as Kevin mentioned, we've got 1170 debit. That would be your risk, right? If you paid $1,170, well, it's trading closer to $9, so you're paying $900 as your risk on that trade. So the risk reward's better if the stock falls, but the stock is down lower. But if you pay that $1170 debit, it would take your break even to $596.70 over the next 21 days on this trade. The option market pricing in for the September monthly options is about a plus or minus $40. So if you think the stock's going to rebound $40, that gets into that profitability level far above the $596.70 break even on this one. So take that into consideration.
All right, looking for this to bounce back up towards VWAP at a minimum.
Even above 635, it's still more than a double in profitability on this type of position. So yeah, maybe looking at the 575, 615, 625 butterfly, that's trading at 1170. So that would take your break even down too. But that would be equivalent to what this was when we looked at it earlier. But definitely bullish trade. Definitely need to move to the upside on this type of strategy. But you offset some of the costs on it, the risk, the initial risk to buy this type of position by doing the call butterfly, the unbalanced call butterfly, as opposed to just buying maybe the vertical outright on that. So that
Looking for a bounce back to VWAP.
all right, that's going to wrap up this.
Let's see what hedge flows look like. They're trying to turn. 0 days, not a whole lot here. 0 day. A lot of this is cleared out. Let's see what non-0 day looks like. All right, so we got the 77.50 up here. Still a 99 percentile. Possible for this to continue higher.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, that stroke? Yes. Now we're in the car together almost daily. We start to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference. You know, action cares.
Hi, I'm Alex. I'm Jade. And I'm his mom.
God, I hate that commercial.
Same goes for where you invest.
Strengthen the
He's still talking, Leisman.
They kind of go the opposite way. The idea that hiking
I get it. He's their top economist, but doesn't really add any value to maybe for longer term people. I don't know. You find Leisman is helpful. I find people like Ryan Dietrich, Dan Ives, Tom Lee, people like that are more helpful. Just my 2 cents. All right, so the Fed had his say. A little bit more volatility in the market today than usual. And VIX, what is VIX doing? VIX was at the lows. Apple, here's Apple. VIX still at the lows, showing a doji for now. I have September calls. I don't think those will ever do anything. Yeah, we could get a bounce. We could get a bounce.
Fiscal, treasury, dollar, other things that are in the treasury's purview. Those are just the conditions that we'll take when we set the policy.
Well, talking about the weather is probably a good place to end, Austin. Thanks very much. Fourth year in a row, exclusive interview here from Jackson Hole. And back to you, Dom.
All right, Steve Leisman, and thank you very much, Austin Goolsby, who, by the way, will be a voting member of the Fed Policy Committee next year. All right, checking up on the healthcare sector after
S&P 500.
earnings. That name is back when half
Just consolidating here is another bear flag. What are we going to do? What are we going to do? Palantir. All right, Palantir is starting to bounce. Okay. NVIDIA is starting to turn. NVIDIA might be an opportunity. It is a Friday. Positions. I did roll out my Microsoft to March. Took some profits. Didn't expect to get to 515 so quick, but we did break higher. Here goes S&P trying to push higher now.
Benchmarks for today's equity market. The end of job or the end of human struggle. We see the end of studies in the air. Others follow the noise. We follow the money. Dreaming of life by the sea. Carolina Homes of Ocean Isle Beach. We make your dreams. Whether you're ready for a turnkey home or looking to place a modular or manufactured home on your own land. Expert guidance and coastal ready designs. We offer homes for every buyer, whether it's for first-time home buyers, vacation homes, or retirement by the shore. Homeland will help you make the most of it. Your coastal life starts here.
Hi, WM turning. Come on, let's turn the corner here. Give the bulls a break. Hedge flow is still dropping. There's not a whole lot in the, not a whole lot here. We got some positive gamma right in this area. The red indicates the dealer is short. The market is long. So we're looking for a push back up. Not happening yet.
with the the setup today. Medtronic is reporting earnings next Tuesday. Jenny and Kevin both own it. Kevin, we'll start with you.
Yeah, this stock's been on a tear down for the past 3 months, which is rare. Usually when I own this name, it doesn't perform all this well. But I think the momentum, the setup is better than we've seen in some time. I want to see a lot out of cardiovascular, especially with cardiac ablation. What I love about this name is that as we baby boomers age, we become more and more of a prospect pool and potential customers for Medtronic.
All right, so demographic tailwinds, Jenny, is that a bigger part of the story?
Kevin stole the thunder. That is the story, right? The aging demographic is the story, and it's why it's been so compelling for so long. But meanwhile, the stock's really done nothing. So sure, it's been on a tear since June, but it's still down.
It's like nobody is trading today. You can see that there's a very little. Let's see what the that's market makers. Let's look at customers. All right, so there's a little bit of negative gamma here. Customers 99 percentile at 77.40. Maybe we get there 77.40.
I'm still trying to process that he's a baby boomer. We're just gonna let that go. Finding out a lot about him today.
Let's talk a little bit about Jim. We have a few seconds left here. Healthcare as a sector, we've seen the hot kind of trade cool off a little bit as of late. Is there any place in healthcare that's more compelling to you than say, Medtronic?
For me, pharmaceuticals, and I know devices, Medtronic has been fine, but pharmaceuticals are where I really like the valuation, both in an earnings multiple point of view and also dividend yield. So I'm looking at things like things I own: AbbVie, AstraZeneca, Vertex. No dividend yield there, a little bit pricey, but great growth profile. Those are the three names I like, and with new money, I add to them here.
All right, Medtronic earnings coming up after into this week. Thank you guys very much. Stay with us here. We got final trades coming up right after this break.
All right. Not much going on here. Slow Friday. We had a nice run up thanks to Warsh this morning. That faded pretty quickly. Apple, Microsoft trying to hang in there.
So there's that flexibility as far as when you have to get out of this position. But directionally bearish, if you think we're going to maybe pull back here a little bit from this spectacular run that we've seen so far in the month of August. All right, that's going to wrap up Fast Market today here on the Schwab Network. Stick around, though. Next Gen Investing is coming up next.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends. Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience. They help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platform.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals. Welcome to Schwab Network, where real-time market coverage meets excellent strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, without the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, you break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network.
All right, S&P pulling back. Oh boy, here we go. We dropping here. S&P. S&P dropping off. All right. Reversing.
Good afternoon and welcome to the next show of Investing in Mountains Coffee. Jenny Horn has the day off, but joining me here at the top of the show, special guest here in studio, Mr. Rick Ducat's with us as he'll help us go through a couple of our movers here. We'll look at the chart and trade as we do normally, but before we do, let's take a look at where the market sits. We're basically the halfway point here in the trading day, and right on the screen, mixed market, I would say, under the surface. When you look at sector performance, about 40% of the S&P 500 components are still higher on the day, but we are firmly red, 0.3% of the downside for the SPX, the NASDAQ and the Russell, both down much larger margins. NASDAQ 100 down about 80 basis points, Russell 2000 down well over.
SPY put flies coming into view.
The 3000 line as well for the Russell 2K. So, Rick, we had the big speech in Wyoming, Jackson Hole this morning. Initially, it seemed like it was well received. I guess one could say it may still have been, but risk assets certainly turned a little bit more red here as we are round that midway point, as I said.
NVIDIA continues to drop off here. NVIDIA not looking good at all. Big reversal on NVIDIA. Ouch. Ouch. NVIDIA looking ugly.
Time now, and some earnings to look forward to next week as well. Heavy eco data week next week on the docket, quite a bit in terms of manufacturing and jobs data as well.
Yeah, one of the things that we knew was going to be important this week, but you just don't know how much it will come to fruition, was not only Jackson Hole, but was of course NVIDIA. We got the NVIDIA earnings, sort of a delayed onset reaction. Some of it came to Jensen Huang and his team sharing unprecedented levels of visibility for the guidance. You saw, over 400 billion, I think it was, in market cap created as a result. But in real time, we now have an NVIDIA that's down over $200 billion on the day for no real reason other than this is just a volatile stock. So, Rick, when you look at sort of the week that was for NVIDIA, I know most of our show won't cover that. It was sort of the epicenter of everything this week, and unable to hold on to the rally, at least, entirely, as it's down below 219 here in real time.
Yeah, well, $200 billion isn't what it used to be.
being kind of facetious there, but really, you're right though. It is a bit of a drop off here today. We'll have to see how things solidify next week going forward as well. Kind of a disappointment from our first mover today, Marvell as well. But cybersecurity has been quite strong here. We had earnings from Okta. Sentinel-1 didn't do quite as well here, but CrowdStrike also showed some strength here. So we'll have to keep an eye on that sector as well. A very interesting, notable part here, as I often say, for as many opportunities as AI bring, it also brings many, many new threats here that are requiring even more levels of vigilance than we previously saw.
Yeah, let's talk one of those movers that's on our board here today. Marvell is one of them, as you mentioned. In real time, the stock's down and around here. It's 9.8%, but I'm going to say it's down 10% in real time, just because it's a cleaner number for me. This is a substantial move. This is a company that you talk to analysts who are just looking at the fundamentals, love the story. This was the subject on Trade 360 for our 360 round, and we had the gentleman who covers this stock for Morningstar. He moved his valuation target to $300 a share. He liked both Broadcom and this name in this space. It's sort of this custom ASIC, sort of really high level. I think XPU is the other way of saying it. Chip specifically for AI. Now, it seems there was a little bit of disappointment from the street because they were supposed to be, really benefiting from this specific contract and partnership they have with Alphabet, and we're just not getting a ton on that, it seems. But all in all, to me, this was an example of the numbers are fine. The story is the same. It's just whether or not the street.
More bear flags. Looks like we're going lower. S&P.
That's it. 10% is 10%, Rick. This stock's down 10%. What does that tell us?
Well, to me, it makes me have a few questions here because, as you said,
Trend is down. DWAP is turned lower. Price moved below it. And we haven't looked back since.
So that seems to be quite strong, but Marvell is more of a picks and shovels type of play in the
Okay.
AI industry rather than focusing mainly on these AI processors. They make a lot of the infrastructure components that AI supercomputers need, optical interconnects, Ethernet switching, stuff that links all these thousands of processors together all at once. So these are the things that you need to make these large AI-focused pieces of technology here. They also are suppliers of Western Digital and Seagate. They're also involved in photonics, which is another crucial sector for AI infrastructure that delivers the high speed and low latency type of equipment that we need for this type of product here. So perhaps a bit of a disappointment here. Maybe another different view of
Microsoft's still hanging in there. NVIDIA dropping off. Looks really ugly for no apparent reason other than people taking profits. Reversal off yesterday's high. NVIDIA for Friday. Looks pretty ugly for a Friday. Big reversal. Looked like it was going to follow through yesterday. Today would come in and just the opposite. Sold right after that little pop this morning. Below VWAP. VWAP down and to the right. Microsoft starting to fade too. So we might have to wait for more highs next week. Looks like Microsoft is going to pull back a bit. Microsoft. Okay, it's still above its 20 EMA. So a pull back to the 10 or the 20 EMA on the 60 minutes, not unusual. This is Microsoft. Whereas if you look at NVIDIA, completely different picture, right? We had a nice pop. We're back below the 20 EMA. Do we bounce here? It's possible. Higher low, 210. We're $8 above the gap. Okay. So with the S&P dipping, I'm going to make some lunch and I'll be right back. Firm holdings. Affirm had a good day. We're back off the highs of the day. All right, we'll keep an eye on the S&P for now. S&P, continue with the bear flags. Bear flags.
Again as well. JP Morgan, Piper Sandler, the list goes on.
Okay, until these bear flags stop and we reverse, get back above the 3 and the 9 EMA. Until we do that, it looks like lower. We're going to test 7,700 support. And I'll be right back.
Heavily focused on the technology aspect here. So rather than a conventional credit card you get from a bank, a firm will underwrite every purchase you make in real time, kind of allowing them to dynamically adjust their credit risk or quickly block transactions if the consumer is overdoing it in terms of their spending. So they kind of have a nimbleness that is not really found among these other big financial institutions. They don't really charge late fees or include compounding interest either. So perhaps more of a consumer-friendly standpoint as well is what this company kind of uses to differentiate itself.
Yeah, good stuff. Excited to look at the charts as well, as both these stocks making pretty big moves here intraday. Look at some example trades as well. We'll take our first short break of the program, and me and Rick will be back with some charts and some trades on Marvell and Affirm. Next Gen Investing will be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. So like that? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm going to be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing here on this Friday afternoon. Alex Coffey, Rick Ducat, chart and trade time, lead market technician for the Schwab Network. Rick Ducat's here. We're going to go through the technicals. We just discussed some of the kind of, I guess, narrative surrounding some of these moves here intraday. Both these names making big moves, but we're talking Marvell first. Like I said, doing some healthy rounding. I'm going to call this stock, actually is now, it's down over 10%. So we're going to call it down 10% today. Numbers are fine, but fine, maybe not good enough.
Yeah, Marvell still handily outperforming the SMH semiconductor ETF and the XLK. We can also see its correlation to the S&P very strongly breaking down in recent days here. So an interesting thing to consider is if they start becoming increasingly correlated once more, it could present possible opportunities. To look quickly too at that data center infrastructure space, some of the big names, Intel, AMD, and Marvell now pretty close on the year here. Cisco Systems, other ones too. Broadcom earnings next week as well could be another one to watch. So when we think about our chart here specifically for Marvell, as we said, about a 10% drop today that has taken us beyond this upward sloping channel type shape that we established in the shorter term. It also, importantly, is bringing us below our relative low point here near about 220. So not exactly what you'd want to see if you're bullish in this name. Yesterday's price action stalled out at an old high here that we reached again about a week ago or so, near about 252. So now the thinking would be more to looking toward the downside again. 195 is where another gap began. That could be an area of potential support. Our moving averages that we follow in this case show that we are breaking through 3 of them in quite rapid succession here. Our 5-day, 21-day, And 63-day exponential moving averages here are right around now our 63-day EMA coming in at 217. So a break below that one would be the most significant of the three, as it has the longest time horizon that it follows here. So that now becomes a supportive area to watch out for as we head into the close of this week here. RSI, our measure of momentum, we were trending upward very modestly here. Now we've broken through that trend line. We've broken through the 50 midline. So more of a bearish lean after we digest this earnings event here.
Yeah, and it's a stock that's been, significantly higher than here. Of course, it's still had tremendous performance. What I looked at, post earnings here, maybe you're bullish this stock, you're positive on it, you want to look at a way to kind of buy the dip in a risk-defined way. I looked at a neutral to bullish short put vertical with the 200 strike being sort of our linchpin here, our short strike. 200 sort of coincided with sort of a recent low that we had made in this name, as Rick pointed out on that chart. And so that was the idea here. If you go up to September 18th, a few weeks from now, gives you a chance, if you collect $1.25, to have a 3-to-1 risk reward. Break even would be 198.75, so below that potential support line, but also below that psychological support line around 200, if you believe in that. Risk defined, risk is 375, max profit is 125. Neutral bullish strategy in Marvell as the stock declines 10% here post earnings. Now to the stock that was making a little bit better move here, but giving up some of those intraday gains. We're talking Affirm. So you were talking to us before. This is sort of a tech adjacent fintech name, but kind of repurposing, layaway. And in many ways, it's just, 4 installments, buy now, pay later. Kind of sounds like a credit card repurpose in some ways, but that's for another day. Talk to us about the tech.
Yeah, so underperforming the financial sector here, firm up about 2% during the past year. Financial sector, XLF ETF, up about 8%. When we think about the buy now, pay later space as well, some of these names are seeing mixed results here, but more negative to say the least over the course of the year here. Affirm and Block and newcomer Sezzle are some of the only ones that are more positive here, while PayPal is having a particularly bad day as well due to its acquisition deal falling apart. SoFi, Upstart, not really doing so great either here. So now to think more specifically about Affirm, what we see here is a rather wide-ranging channel type shape here. We have an initial low point. We connect some of these subsequent lows. Not really a channel in that it's bounced around between these two trend lines very well. But if you duplicate the line, put it across the highs, that could give you an area to watch out for in the coming days for potential resistance. So we also briefly took out our old highs here near 86. That did not last here. We did open up around that area and push above. Now we find ourselves testing another set of highs here, more close to the 81 level. Our gap began at 78, and a relative low comes in here near 72. So 92 as well, our red line here, if we were to backtrack all the way over here, lines up with some old highs that we established almost a year ago. So our moving averages here show a rather different picture. In this case, the faster ones are on top of the slower ones here. They're diverging farther apart from each other. The closest one is our 5-day EMA, 78.49, our dark blue line that represents 1 week trading activity. RSI, we are seeing more of a triangular shape, a longer term downward sloping trend line in red there would be the area that bulls would want to break above and push into that overbought area as well. We're above the 50 midline, more bullish right now.
Yeah, it was a really strong report. It was received positively, but giving back a ton of those intraday gains makes you wonder sort of a false breakout maybe took place here today. Rick, thanks for the chart. Let's take a look at an example trade real quick here for Affirm. My thought being, this is a stock that has sort of been in the range between sort of the mid-70s and the mid-80s. We tried to break out of that range today, fell back into it. And so it's a neutral strategy as we're back into that range. I'm just thinking that might hold at least for another week. And so it's the 75.85 strangle with $3 wide wings creating the 4-legged iron condor. If you collect $1 on these $3 wide wings, it makes a pretty easy math. 2-1. You risk 200 with a chance to make 100, with 86 being the break even to the upside, and 74 being the break even to the downside. You got a little bit more cushion to the downside of the stock trading around 81. We just saw the stock try to trade above 85. You couldn't do it for more than a few hours before coming back down into the range. I think that's going to continue for another week. Chance to make $100 on $200 in risk on this neutral strategy. Thanks to Rick Ducat, as always, for joining us here on Next Gen. We're going to take a short break. When we get back, we're going to discuss some tech stocks and look at some of the earnings that we have seen so far this quarter, which have been quite robust. We'll be right back.
Instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @Pedalides and connect with me, Nicole Pedalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Hartley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. I'm Alex Coffey. Jenny Horn has the day off. It's time to welcome in our next guest. That's Dennis Dick, the Chief Market Strategist for Stock Trader Network. Happy Friday to you, Dennis. Nice to have you on the show to discuss a really important topic. That topic, of course, is tech earnings and all of the information that we've had to absorb this week. I'm just looking in real time. If my numbers are right, technology, the 67 names in the S&P 500 combined for an aggregate growth of just shy of 75% year over year, which is just extraordinary to say the least. But we had a big one this week. That was NVIDIA. I think we should start there, Dennis. What did you learn from NVIDIA, and what do you think that means for the stock now going forward?
I mean, we're pretty much through tech season now. It's been, like you were saying, fantastic results. The bar may be too high on some of these companies. Like NVIDIA was unbelievable yesterday, so obviously they had the report. It was a good report, but then the guidance when they started the call saying that they're looking at revenue growth of 70% up to 2028. Some people were saying like 45% revenue growth. So then the stock just blasted. We're looking at 210, 212, 215, 250, and it was obviously continuing to go higher from that point in time. And it got up to 229 yesterday. We get Marvell earnings last night, and it kind of pulled the rug out of the tech trade because Marvell is obviously down 10% year to date, and NVIDIA's followed suit. NVIDIA's actually quietly given back half of its gains from yesterday, currently trading at 218. So you'd say the initial reaction fantastic for NVIDIA, but not the follow through. That's something we've seen this entire month. It's kind of been the contrarian month.
More bear flags.
You're not rewarded, but if you're playing fade trades where you're shorting rips and buying dips, that's what's been working in the month of August.
I want to talk about CrowdStrike. Before we do, one of the things that was really cited regarding
Microsoft, Apple, everything off the highs of the day now.
What I thought got overlooked was if you were to look at the and say, hey, where was it 1 month after the earnings report? It was actually down a month later, 7 of the last 8 quarters coming into this one. Even with this big move, down 4% here today, as you said, giving back about half of, or even more than half of those gains. Not out of the question that we have another sort of liquidation event into this tremendous liquidity that earnings kind of provide NVIDIA investors.
Well, I mean, just give it perspective here. You're an AI leader. The company's in the pole position. The company is charging for 70% revenue growth. You think this company is just exploding? The stock must be exploding as well. That hasn't been the case. If we go back to 1 year ago, NVIDIA 1 year ago was $212. It's $218 today. So, I mean, we really have gone nowhere with NVIDIA. It's been the other stocks, the Microns and the SanDisk, that have taken over and been your leaders here in the last year. So, NVIDIA's just been quiet consolidation here. Some people believe it's consolidation to go higher. Some people think, it's obviously, a crowded trade. Maybe it's uncrowding to a certain extent here, too. But, the stock, the company performance has been unbelievable, but the stock performance has been muted. So, I mean, really, the last year of NVIDIA's gains just are not there.
And do you think that's because one of the things I was often saying, I'm curious what your thoughts are on this, is I always say, hey, what moves stocks is the surprise more than the numbers themselves. Is it just really hard for NVIDIA now, with the law of large numbers, to really surprise? Despite the fact that I think they did a really good job trying on Wednesday afternoon.
I mean, how do you grow a $4 trillion company trying to come to $5 trillion, $6 trillion? It's a lot easier to grow a company like AMD. When we were talking about this last year, sitting at $500 billion market cap. It's easier to grow. When you're this large, it's hard to grow, and you have to get into everything. And that's why NVIDIA's talking about getting into robotics, talking about spreading out, trying to really get into everything. Because how do you grow a $5 trillion company? You've got to get into everything. I mean, this has been, it's not just an NVIDIA problem. I mean, Apple's growth, yes, the stock has performed okay, but really, the revenue growth, once you're this large, it gets tricky. So that's the Mag 7. And if we just look
This morning, we had about almost 300 stocks advancing. Now we only have about 200. 300 are declining.
And a lot of other tech trades have actually lagged over the course of the last year. So when we enter September, things will change. Obviously, we're in a holiday trade for a lot of traders. August, this is typically one of the slowest weeks of the year. So maybe when they vote in September, the institutional money manager comes back to their desk. Maybe they come in with their rah-rah, let's go into the year end with the tech trade on. But, right now, I would say this tech trade is guilty until proven innocent, because even those leaders that we have, like the Microns and the SanDisks, are starting to show that they're starting to get exhausted. Buyer exhaustion coming in. I mean, SanDisk up 2,000% in the last year. These stocks are going to have a difficulty continuing to go higher simply because everybody's already long.
All right, let's talk CrowdStrike. As you talked about, hey, some of these tech trades aren't necessarily being rewarded, but one area that has within software pretty consistently, maybe at Zscaler, has been cybersecurity. Seems like we're questioning, maybe less so post Salesforce this week, the role software is going to play, and maybe how well those margins are going to be. But no one wants to question cybersecurity, and it's probably because the numbers have been so good. What did you make of CrowdStrike?
I mean, the numbers were fantastic. The stock had an awesome reaction. And then today we get a little bit of a hangover. You get the initial move. Again, we've seen this time and time again through the summer. The stock gets the initial boom, and then there's not a lot of follow through. That could be a seasonal thing, but it also could be a sign of buyer exhaustion. I mean, CrowdStrike in the last 4 months has doubled. So we go from 110 to 220. It's already had a lot of the gains priced in. So it could be the fact that maybe the bar was just a little bit too high. And that's why we're pulling back here a little bit this morning. But you think going forward in a world that's going to be...
All right, Mondo, you might have something here. It looks like we might be bouncing.
A month ago, talking about internet traffic being 1,000 times more AI agents for every human being that's on the internet by 2030. I mean, you think about where AI is going.
Microsoft hanging out near the highs.
Competition coming for CrowdStrike, how sources we don't even know. But with that being said, the need for this space is going to be very apparent, because there's going to be AI is going to help, obviously a lot of companies be more productive, efficiency. But there's also going to be bad actors that are using AI. And I think those bad actors, if you try to hack your computer, steal your information. So the need for a CrowdStrike and Palo Alto networks, which reports next week, is not going away.
Yeah, and next week we're going to get Dell, Palo Alto, and Broadcom, I believe, and basically we're going to wrap up the earnings season for technology. Now, those three are going to headline things. They're going to be joined by NetApp, HPE, and Ciena to sort of round out the tech sector. But, you know, we mentioned Marvell. Well, its counterpart in some ways is sort of Broadcom. We mentioned CrowdStrike. Its counterpart in many ways is Palo Alto. Do you expect much surprise from any of these names next week?
I think the earnings will be fine. It's a matter of the reaction to the earnings. And as traders, you always want to know how they react, because sometimes they're going to have a great earnings report and the stock can go down. And people will say, well, how is this possible? It's just a matter of, like, was there a high bar going in? That's the stock been running. Was the stock sitting in the gutter? Like a stock like ABGO actually has a lower bar, because this is one that's come off the highs significantly here. $495, the all-time high is 366. It's been kind of sitting near the lows, not doing much here. So the bar is actually a little bit lower for an ABGO, where and if you look at Palo Alto, it's the opposite. Palo Alto with $190 stock back in May. Now we're talking about $370 stock. The bar is really high for Palo Alto. So you can have both reports, and both could beat, both could raise. But the Palo Alto network has to beat, you know, it has to have a greater report here, because the bar is simply higher. So, you know, always when you go into report, the numbers are one thing, but the bar is everything.
You know, as a market strategist, someone who's looking at things and assessing things through a trader lens, as you do, Dennis, one of the things that I think is, you know, if it hasn't been hammered into, you know, market participants yet, it should be, is that volatility at the headline index level just is not telling us the story. We got a VIX that's sub 15, but if you were to look at the VIX EQ, which is the average component volatility, it's still even coming down now through most of earnings season, 35. And you talked about, you know, some of these names. I mean, we talked about Marvell, it's down 10% today. You talked about NVIDIA, not even having earnings today, it's down 4%. CrowdStrike's pulling back. The moves under the surface are tremendous as this rotation just continues to happen. How are you navigating that?
Well, you've got to change, because we don't get an everything sell-off anymore, and we don't get an everything rally anymore. Automatically, when they're selling NVIDIA, they buy Apple. Why? It's kind of like a staple. Your cell phone, I mean, everybody's got one. It's more defensive, so it trades more with the staples. And we know if we look today, you've got a bit of a tech wreck, obviously, thanks to Marvell last night. But if you look at what stocks, it's not red across the screen. If I'm looking, half of them are green. What's up? Berkshire Hathaway, kind of the anti-AI portfolio that Greg Abel has built. Some banks are trading higher. You have some software names like Microsoft and Apple, or Apple, obviously hardware, but technology trading a little bit higher. So even rotation within tech is there. Netflix moves opposite the market, it seems like, almost every day. And if you're going to sell NVIDIA, you might as well buy Amazon. It's trading up 3.5% today too. It's not the type of market that just sells everything or buys everything. It's like if they're buying something, they're selling something off. Even when we're trading these reports, you know, when we see NVIDIA start to rally, I might think, okay, let's go short some staples, because we know the staples will probably down the more NVIDIA is going to be strong. I mean, I don't know what it takes to get the market to, like, move together again, but the S&P is insulated because of all this rotation. And I don't think that
Microsoft is holding up the best.
I love this conversation. I wish we
Workday.
because I think it is the story of the market. Planting the flag.
Amazon. Daily still looks good off the highs of the day.
Those two trades have been at odds since. But Dennis, we'll have to continue that here soon. Appreciate it as always for you taking the time. Dennis Dick, Chief Market Strategist at Stock Trader Network. We had a great weekend. We really appreciate his time. But coming up next, we're going to continue the conversation. We take a look at more in-depth look at some of these chip stocks. Stick around. Next Gen Investing. Be right back.
Microsoft. Possible the NVIDIA could see a nice little rally off the lows, some short covering. Watch NVIDIA here. NVIDIA. Potential short covering comes in. The futures are turning back up. Mondo took some calls a few minutes ago.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap? Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Mover brings traders the biggest.
Watching for short covering NVIDIA.
instant reactions, earnings breakdowns, and hot takes that teach you about the stock and markets. Follow me on X at Ken Penelides and connect with me, Nicole Penelides, on LinkedIn, Facebook, and Instagram.
Oh, she's got your smile. Carl. Yep. Your number one brokers here to look for everything independent.
Actually, we invest with Schwab.
We have everything we need all in one place.
I can set up for college fund.
I'm learning about trading strategies. Schwab helps me generate retirement. All this Schwab is everything you need is making me cranky.
That's somebody need about.
Invest your way with Schwab.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Next Gen Investing. I'm Alex Coffey. It's time to welcome in our next guest. That's Ed Matowski, managing partner at Chatwood Investments, joining us here over the phone to discuss some of these big-time memory players. Ed, happy Friday. Thanks for joining me. I want to start with Micron. I mean, this is in many ways kind of been the stock of 2026. We got earnings that we'll get toward the end of September, so about a month runaway. What stands out to you?
What stands out easily is that they have 50% more demand for their product than they actually can produce. They're in a terrific situation, and they're trading at 13 times forward PE, forward earnings. So, I mean, I have a target price of $1,500 on this, and that's 64% higher than where it's trading.
Before we get to sandwich, we can include SanDisk here. So if you were to choose another stock and say which stock has maybe been the stock of 2026, maybe it's SanDisk, honestly. But a lot of the same story here. The capacity, being very much outpaced by demand. But I guess my question to you is, doesn't that kind of limit the amount of upside surprise we can have when the only variable then is how much they want to ratchet up the price for their customer?
Yeah, I mean, that definitely does bring up the actual biggest question is, can they make more money if they're limited on their ability to produce? Now, SanDisk doesn't have quite the problem that Micron does, although Micron competes with SK Hynix, and they are the largest producer of HBM memory chips. And SanDisk doesn't have that problem where there's another company that's doing even better than they are. But in terms of Micron, the only thing they can possibly do is create more ability to produce the product. And I don't see that happening in the near future.
Things that we've seen throughout history with these names in particular, and it's not to pick on
S&P looks like another bear flag, unfortunately. Looks like another bear flag. It's not reversing strong enough. Looks like a little short covering.
Yeah, it's such a unique time that's going to apply. You have AI with such demand, and we don't know how big that demand's going to be. But for years, I've been in this business and seeing Micron, this kind of win, really knowing where it was going to go and how strong. But this is the real deal with SanDisk and Micron.
Okay, so then let's look at it from an investment thesis standpoint. Then, partner, you and your teams, your stewards of capital. The bullish case kind of writes itself. What's the reasons to shy away then? Is it just simply the volatility of these trades, the sort of hot and cold nature it seems the market has right now with these AI infrastructure trades, or is it just a separate risk reward? And in your case, it seems like you favor the reward.
Normally, but I've been studying Micron and SanDisk for a while, and I actually bought Micron for myself about 2 weeks ago. My biggest fear is that they come out during their earnings call say one negative thing, the stock will get trounced. Just like that happened to Samsung and SK Hynix in South Korea in the same industry. So just one negative comment that is interpreted incorrectly could really trounce the stock. But from a PE standpoint, it's still selling at such an attractive level that the downside is not that great.
You're also looking in the fintech space at a buy now, pay later name. Now, I think this is on me more than the company itself, but I had not even really heard of this company until recently. We discussed a firm earlier on in our show now post earnings, but the company you're looking at is Sensible within this buy now, pay later space. It was one of the best performers in the group. What stands out to you, and what makes it maybe stand out apart from some of its peers?
Well, exactly what you just said. It was not that well recognized. Not a lot of people have talked about it, and it looks like it has this thing figured out. Because when you go to buy something, you can buy it, get the product, but then have immediately a buy now, pay later situation where you're paying the rest of it off over a 2 or 3 week period.
Really appreciate it. Hope you have a wonderful weekend, and appreciate the insights on the stock pick and the Tennessee managing partner of Chatwood Investments. Coming up, we'll be joined by Sam Bonas. We're going to take a look at Gap after its earnings. Maybe some disappointing earnings, but a shakeup at the Old Navy segment. Perhaps bringing some optimism. We'll get some thoughts from Sam right after this.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your
S&P, no follow through on the bounce.
Plus, get 24/7
Microsoft, there's nobody trading right now. It's just smaller traders. There's no momentum. There's no volume. Just sit it out until we can see some volume come in, maybe around 2 o'clock. It is Friday, August 28th, moving into September. Okay, the 31st next week starts off the week at the end of the month of August. First trading day of September is Tuesday. So right now we're just looking for stocks to finish up the month. With a little window dressing, perhaps. NVIDIA, I can't believe NVIDIA pulled back as much as it did. There's just no volume. There's no volume. Look at the volume today. Look at the volume here compared to the volume this morning at here. Even into the 12 o'clock hour. There's no volume. There's no volume and very little momentum. Until people start to participate, there's really nothing to do. Go take lunch, come back in an hour.
Welcome back to Next Gen Investing. Another stock that caught our eye today is Gap. It's on the move post earnings. Joining us now for more on why the stock is on the move is Sam Bonas, host of Morning Trade Live and here for the Schwab Network. Now, Sam, we broke these earnings yesterday. It's kind of more of the same, but we all kind of wondered, hey, is this shakeup at Old Navy enough to change the narrative? And looking at the performance, I think maybe.
Yeah, I mean, clearly it was over the company. Good afternoon to you, Alex, because I think the market seems to be taking some comfort in the fact that they're trying to remedy. Spot within these earnings.
Snowflake. All right, NVIDIA might be an opportunity here. There's very little volume, but might be an opportunity. Shorts starting to cover.
rearranging the deck chairs, if you will, and sorting out who's going to be taking the leadership at the top. And that seems to be what the market is responding to today. Let me just run you through exactly what we got from this earnings report, because as I said, shares rallying, it seems to be less to do with the earnings and more of the announcement which came after, but the numbers were pretty mixed. So sales coming in at 3.65 billion, below the analyst estimates there. Comp sales down 1% year over year, 3% year over year, of a decline in in-store sales. Online sales down 1%. Profit $1.38 a share. That was compared to the 57. Although adjusted EPS, which does exclude, I should say, the tariff refunds. You and I have been talking a lot about those because obviously we've been seeing a few of them coming through by the way of these reports. Were 52 cents. Analysts were looking for 48 cents. It got that $95 million tariff refund during the quarter. They're apparently going to use the money or they did use the money, I should say, to actually lower some of the costs of some of the products. But the rest of the tariff refund is expected to come through in the current quarter. Now, let's run through the breakdown of what happened here, because as far as the brands that come under the umbrella, the Gap comp sales were up 10%. So that was a big, that was the good part. And, obviously you can see it on this chart here. It's the breakdown by brand, where that strength had come from, but also where the weak points came from. I mean, Old Navy down 4%, Banana Republic held up okay there. And Athleta was down 12%. So they've obviously got some issues going on there. But let's focus on Old Navy because obviously being down 4% a year over year is the big drag here, because it is the first negative same-store sales number we've seen in about 3 years now. They put it down to the unanticipated slowdown in traffic. They say it does make up, as I said, for more than 50% of the sales here. So that's why they were quite disappointed. But the CEO put it down to disappointing results from the summer marketing, which they
S&P trying to turn up. NVIDIA might be an opportunity here, folks.
things they say have though been picking up.
S&P turning. Maybe.
This new CEO, Michael Francis, who will take over in November. They clearly needed to reinvigorate the brand. I think, the numbers in the previous quarter really spell that out. He's no stranger to the space as well. He has helped other turnarounds at companies like Target, for instance. He's worked at Walmart as well. He had actually earlier joined the marketing team at this company, but he will now head up this specific brand, as I mentioned, from November. The previous boss will then go into an advisory role. So Francis will basically work with the Gap CEO to help turn around things at this particular brand for Old Navy. As we know, it's a critical brand to Gap as well. I mean, it's why Gap has had to cut its revenue forecast here in the guidance to 1 to 1.5% when it had previously been looking at about 2%. And, the CEO of Gap has said that there's a lot of work to be done. It's not where they want it to be. It's funny, actually, I was talking to Charlie O'Shea about this morning about, a kind of summary of what he's seen in the retail space, what the Walmarts, the Targets, what the Ulta Beauty has been doing as well. You and I discussed that one too with the lipstick effect. They've been doing quite well. But he said the fact that you've had this rearranging of the deck chairs straight after a disappointing quarter says a lot, although he still expects it to be a challenging area this year, because obviously this new CEO not coming in until November. They've already cut the guidance here as well. So maybe we could be in for another tough quarter as they kind of right the ship here. But the fact that, as I said, the company seems to be trying to remedy all of this and fix what's going wrong.
All right, we're showing some positive results here, Armando.
We did have a couple of price target boosts here. Wells, $23 that takes it to. It's still got an equal way to give me yes, that keeps the buy at $42, like Gap, and also the buyback here, Alex.
Sam, I appreciate it. Gap on the move higher, off the highs though intraday, but still a nice reaction on, let's be fair, kind of mediocre numbers, but a shakeup at Old Navy seemingly spurring some optimism. Coming up next, we're going to discuss Meta after it reached a tentative settlement with the many state attorneys generals and others in regards to the teen addiction question mark. Be right back.
Trading at Schwab It's powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Market moves, earnings breakdowns, and trade ready insights. Follow me on X, me on LinkedIn or Instagram.
How's it going? First days. Sometimes, excellent. Try it again. You could have done that. MSOS. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. Markets react. We are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Schwab coaching is concept.
All right, volume picking up a little bit. We'll see if more shorts cover or if we can get some follow through.
Coaches who have been in the industry, around the industry for a long time. We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
It's time to discuss Meta platforms, and joining us for that is Angelo Zeno. He is a senior equity analyst at CFRA Research, covering this name and many, many others. Angelo, good to see you. Happy Friday. There was a lot of question marks, a big cloud circling this company with sort of the legal overhang. Now they reached this tentative settlement. How important was that, and what were your general takeaways from that decision?
Yeah, and thanks for having me. So I'd say overall, listen, it's a huge deal in the fact that it removes a major overhang for the stock. I think what you never know when it comes to the Googles and Metas and other kind of social media or comp services companies out there is you get the risk of regulatory overhang, and that could be for years and years. It's obviously something we saw Alphabet had to contend with. Ultimately, it worked in their favor, but nonetheless, if you're an investor, it's not something you want to sit around with and watch. So the fact that we kind of got some sort of resolution is the most important part of this. When we kind of think about now also implications from it overall, listen, I think you're talking about 12, 13 billion in terms of the settlement within the
NVIDIA turning a little bit more now. NVIDIA. Still not a lot of volume compared to this morning. Volume is pretty minuscule, so it's just small traders, it looks like, for now. Small traders, very little volume. NVIDIA. Friday is generally not a good day to take on a lot of risk. We are reversing off the lows, though.
What's your assessment about where Meta is currently in relation to its peers in this AI race? I thought we started to get some information that almost looked like it was pulling back, floated that they might look at neocloud type operations with their excess capacity, that there was some internal rumblings that they weren't as far along as they wanted to be. But then the last time we heard from them in earnings, they were still spending a ton of money. They depleted a lot of their free cash flow. So it was sort of like they had this offering. I'm just not sure they've decided to take it yet. Where do you assess that?
Yeah, I think you kind of laid it out pretty well in the sense that we're kind of waiting. It's the wait and see when it comes.
We are turning, but ever so slowly on very little volume. Look at the volume here.
Probably going to end up spending more than we previously anticipated in 2027, despite the fact that the numbers in terms of understanding of what Meta is thinking about in terms of their CapEx spend, in terms of what they want to do with their AI plan. And the way we look at it, they've done a magnificent job of monetizing AI on their core business. They're starting to see and roll out some offerings in terms of non-advertising opportunities, and we like that. We need to start seeing kind of some of the revenue momentum from there, and that's going to take time. Where they can immediately generate revenue, obviously, is selling some of that compute out there, whether it be through NeoCloud or others. So we'll kind of we'll see how that plays out. But I mean, if you're an Anthropic out there, I'm sure they're more than happy to buy some potential capacity from Meta. So we need to hear that from Zuckerberg. We need to see a plan of action. Hopefully, we get it on the Q3 earnings call, because we didn't get it after Q1, we didn't get it after Q2, and I think at this point in time, there's some sort of time. Time is at the essence, because we need to get an A plan before that 2027 CapEx number comes out.
Angelo, real quick before I let you go, you guys got strong buy. You got the 750 price target. Is that on the AI stuff, or is that just a missed price and evaluation opportunity?
It's both. The valuation makes a lot of sense to us. I mean, they're still generating the cash flow from operations. And, when we kind of think about the opportunity ahead, we do think the street is underestimating the AI monetization potential. So it's a combination of the fact that they listen 13, 14,000 on 28 basis, plus the upside if they actually come out with some decent monetization initiatives. We think it has the potential to really drive some upside here for the shares.
Angelo, it's always a pleasure. You have a wonderful weekend, and we'll catch up soon. Angelo Zeno, Senior Equity Analyst for CFRA Research, with his thoughts on Meta. It's going to do it for us this week and for the day on Next Gen Investing. Thanks as always for tuning in. I wish everybody a wonderful.
No follow through yet.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and get with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but the same rate of change on PBS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we'll break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
If it's going to break out, it's going to take its time, that's for sure.
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Amazon trying to hold on. Tagged the 21-day, got rejected, and just started consolidating. Nice push on Amazon. NVIDIA. Trying to change direction. Volume is below average for this time of day.
It's 3% move at 45.20 a troy ounce. Oil's at 83.40, losing 0.2%. The dollar 99.65. That stayed pretty steady, and the Bitcoin trade just pulled back a bit, down 2.5%. And the VIX still at 14.52, surprisingly still below 15 at this moment. So we have a lot to discuss, and for that conversation, and 2 hours left of the trading day, bring in Diane King Hall for market moves as we look at all the details that we heard from our Fed Chair Kevin Warsh from Jackson Hole, and all the questions of him flying blind or holding it close to the vest. That has now completely changed after what we heard from him. Your thoughts?
Yeah, it's clear that the fight over inflation is not finished yet from the comments made by Federal Reserve Kevin Warsh in a wide-ranging speech at Jackson Hole earlier today.
We need volume.
Here is my standard.
We need volume.
Underlying inflation is moving to our objective clearly and at sufficient speed. He also said that he is full committed to a discipline, not to a decision. So it's clear that's not a fixed path that the Fed is on. The Fed's 2% inflation target remains full firm and fixed. So they're not moving away from that. I don't think it's any surprise to see that they're not moving away from that target, no matter the Fed group of policymakers you're talking about. He did note that the recent inflation readings were better than expected, but they haven't convinced him yet that price pressures are meaningfully easing, right? The job is not done. He laid out a straightforward path, it seems, in terms of tests. Policymakers have to be confident that inflation is moving toward 2% clearly and quickly enough. He said if data fails that test, the Fed still has, quote, work to do on that front. He also emphasized that inflation does not automatically return to target. The Fed must actually deliver price stability here. The takeaway seemed the way Wall Street investor community seems to view this as more hawkish. There was no September commitment, though. He described current financial conditions as restrictive, suggesting that borrowing costs today may not be doing enough to cool demand and inflation, right? He called interest rates the Fed's, quote, predominant tool for its keeping, in other words, that keeps the possibility of tightening on the table. We saw the CME Fed Watch tool shift in real time because coming into today, the odds of a rate hike had decelerated. Right?
Still no volume.
The expectation that we would see no change.
All right, Google trying to turn. Google.
But the
Google looking a little better. Moving back up to the highs. ABCD pattern. Workday with earnings. Workday holding on to the highs. That looks good. Netflix at BWAP. Pretty decent day for Netflix.
Specifically,
200 days overhead, 50-day below, 21-day crossed up last week. Looking for Netflix to continue. It's a Friday. All right, Apple turning. Looks good for next week. Bollinger Band's opening up.
Saying that more than once. Okay, I definitely hear what you're saying. It does seem more hawkish, and you can see how that's playing out. Stock did initially move higher, though, so that was interesting to watch. But now they've shifted course here. I don't know if I would completely say that because yes, that's a signal, but we do get more data coming in September. We get another CPI report, and the last CPI report is what we saw starting to shift the direction of expectation of rates. Right? It comes September 11th, just a few days before the Fed's next policy meeting, so they'll have that data point to chew on, and that could be the deciding factor, right? What does CPI look like if it's a, too hot, too cold reading? That will give probably the Fed the, final determining factor on what they'll do on that. One thing that's interesting to note with the point you made about where stocks are shifting today, you can see that, okay, if rate hikes are potentially on the table, investors are like, we're going to go back to what worked, and that's many members of the Mag 7 because they can afford it. And I'm glad you brought up some of the other prints because really, if it were today, it seems like there's a rate hike. If it were today, but there's more to come. We have a jobs report next Friday. Seems less interested in the labor market. More in inflation is very evident. You have the CPI print, which you noted.
Apple.
And, when we look at Kalshi and Poly Market and all of these things, we talked about 57% likelihood in September from the CME tool. Kalshi.
All right, NVIDIA, no follow through on that bounce. NVIDIA. Okay, bear flag for now. S&P trying to do something.
Now in September on the 16th, we may get a different Kevin Warsh. He may be looking at other things. So I think you make a great point that between now and then is a long time. It is. There's still time. But the other thing that was interesting to me is the communication style. He was more communicative. This time I thought more direct. I really liked the speech, honestly, in terms of, he was clear. You didn't have, I don't think it left, this speech left investors with as many questions as the last time he spoke. He defended his decision to move away from that traditional forward guidance. He said, look, he was a part of the Fed that did that instituted that back in the GFC period. He said times have changed, and so you don't need that, the way they telegraph and has been for some time, for today's conditions that you needed for a while after the GFC. Nicole. All right. And, I'm just going to have one last thought. Diane, our friend Sam Stovall was on, and he talked about the last 6 Fed chairs that came in, and all 6 raised rates as their first move since in the last 50 years. And then he went back to, World War II, and it was 8 of 9 of the Fed chairs that had raised rates as their first move. Is it a credibility call? Does he need to do it just for his credibility? I think that's going to be a conversation that we have.
All right, yields. Watching the S&P here. Yields, junk bonds back below the 50. To end the week, the 10-year yield, 20 and 30-year yields are higher. Okay, so in the top of the range, top of a range here. All right, so the 10-year is pretty much the top of its range. And advanced decline percent. Advanced decline percent backing off today. Across the board, S&P big caps, mid caps, small caps, and NASDAQ in descending order. All of these pulling back. Equal weight index to finish the week. Got some shorts covering right now. Okay, so we're just sitting near the 21-day. We're below it at the moment. Just below it by about 8 points. New York FANG looked really good this morning. Back underneath the breakout level, triple top. 60-minute. Little dip. We could bounce. Looking for a bounce. Okay, and back to the S&P. S&P 500.
Win. This and lose. This and lose. This and win. This and lose. This and lose. This, lose, lose, win. Lose and lose, win. Even this, lose. Betting isn't investing. Investing is owning. It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
Data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Trying to break above this level.
Subscription revenue backlog was up 14.2% year over year. However, the company has also lowered its full year revenue guidance below its previous estimate. Right now, the stock is holding up pretty nicely, particularly since the stock market sold off. It's up 6.7% at 206.64. All right, another name in tech that reported. Let's get to this one in our tech spotlight at top Marvell. Joining me right now, Noah Hammond, CEO Advisor Shares. Thank you so much for being with us. So let's talk about Marvell. I mean, it's had an incredible run. What were your thoughts about that?
Well, they are more higher priced, right, from the PE perspective compared to their peer group. And coming into these earnings, they had the beats. They had a beat on revenue, right, by roughly a little over 40 million and a penny per share. But they guided down on margin, so you're seeing that reflected in the share price down probably about 10% about right now.
And so when you think about the big picture and the opportunities,
Rejected again. There's just no volume to push this through.
It's the Google relationship. It's potential, right? I have to emphasize that word. There's no guarantees that it comes to fruition. But they did that deal with Google where it gets warrants for Google in return for buying a lot of product from Marvell. And to the extent that they reach the ceiling in the capacity, I believe it's over 6 years, it's going to be about $120 billion of revenue. But it's a big if, it's a big contingency. So, you know, where they're priced now, their guidance down on margin, even though they got it higher for fiscal year 26, 7, 28.
So their numbers are improving, but that relationship, and of course, the relationship with NVIDIA is going to be huge for them, but it's only if it delivers. If the demand's not there, then there'll be some challenges within the price of the stock.
Yeah, they gave you that outlook. You're talking about the outlook not only for this year, but also for the next couple of years ahead. And seeing that, which really could double on the revenue expectations is looking great. Do you think that was wise of them to do that? I mean, when you hear a company, sometimes they're more conservative in the outlook. You said this Google partnership is a wild card.
I think it's one of those things where the deal is what the deal is, right? So they'll communicate what it is, and it is great news. I guess as long as to the extent that they're emphasizing or we're emphasizing that it may not happen, but it's still good news. But yeah, you're right. They have to deliver on it, and the integration you have in this space, with the warrants and the stake that, in a sense, Google could have in this company, the investment that they receive from NVIDIA. The challenge will be is if the demand does slow down, if you see hiccups in this space, I think there's a ripple effect with the relationship these companies have. But if it's game on, and what they said was they still don't have the capacity to meet all their sales requests, and it's brighter days ahead. And even after
Oh boy, it's so slow. DoorDash, just looking at a few stocks that did well today. DoorDash off the highs, but still trending. Microsoft having a good day. Breaking higher. It is currently pulling back. Look for it to push higher next week. Looks good. Snowflake. Intuit moving up the list. Intuit. Lulu. A couple of people mentioned Lulu last week. Still hanging on to the 50-day Lulu. XLY, consumer discretionary, holding on to the 50-day. Currently at 2:17 p.m., we have 5 sectors green and 6 sectors red. Healthcare, energy. Healthcare, industrials, materials, real estate, tech, and utilities are all lower at the moment. Consumer discretionary is up a little bit. Consumer staples, energy, and financials are up marginally. Up the most is communication services. Meta's in that group along with Netflix. Meta reversing from the 50-day. Netflix. There's really nothing to see here. Nothing to see. Netflix. S&P, maybe an end of day run. Right now it's just sitting here at the low of the day. Oh, S&P.
So I think it's a space to be, but it'll still be volatile, it'll still be risky. Investors working with their Schwab advisors have to be mindful of how they're allocated to this space, and just making sure they're smart about the volatility that can come with these companies.
So I was watching, obviously, stocks took a turn after Kevin Warsh spoke, and we really saw the sell-off. And I think about the NASDAQ, its rates move higher. What does it mean for some of those tech stocks, particularly a lot better on borrowed money? What did you think about Kevin Warsh's speech today, and maybe his more hawkish tone going forward?
Yeah, I mean, I hope he's not right. I hope he's the one that's actually being conservative about his announcements. But yeah, as the market reacted to it, it said, hey, growth can be challenging. The cost of that growth is going to be a little bit more expensive. And to your point, the debt that is starting to accumulate in this tech sector, at some point it's got to get paid. And if those opportunities in terms of revenues and the growth and the investments that they're making don't pay off, and that's coming in a challenge where these AI companies are starting to price some of their services a little bit lower. So there's price competition going on with these guys. So they could make a mashup of some challenging times maybe over the next few quarters. But again, hopefully Kevin Walsh is being a bit conservative, but see how the market goes. And we have an administration that does want the stock market to go higher.
So we'll wait on Broadcom's earnings for early September, September 2nd. You have here, we already heard from NVIDIA and Marvell. We'll wait on Broadcom. But I think about something in the broad picture, and you noted that broadly, regardless of the demand and all that, short of capacity, right? Let's talk about that.
Right, they're all talking about that, right? Jason Long talks about that.
Yeah.
They have
Nothing moving here.
they can fill. You do have companies that are starting to build infrastructure. That is the interesting thing about Marvell being sort of this fabless, chip company, right? So they're using more Taiwan.
Adobe up a couple of bucks. Nike up a couple of bucks. SpaceX. What's SpaceX doing? SpaceX.
Meet the sales demand of their product. That's a good thing, and I think that's what gets investors excited about what the next.
SpaceX still on top of the 50-day. Nike. Apparently they signed Caitlin Clark, right? And she's doing some sort of negotiations to get Sophie on there too. Nike looks good. Adobe at new highs. All right, looks good. Marvell. Yeah, Dell below the 50-day. Really nothing to talk about there. Nicole.
Kick off the morning with the data, the decisions moving markets. Morning trade live that breaks down the macro moves driving the price action from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
S&P. Nothing going on today at this point.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Have you ever watched an interview and thought, I wish they had 5 more minutes? Or I want to know how they discovered that hidden gem. That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome back to the watch list. I'm Nicole Pedalides. It's time for Big Moves, where we highlight outsized options trades taking place in the market. Joining me right now, Mr. White is with me, and we're going to go through some of the Marvell options story here. We just had a great conversation with Noah Hammond. Good to see you, Tom. Some of your thoughts on what stood out in the options market when it came to Marvell.
Yeah, stock pulling back 10%, but you got to take this into context. I think everybody should. I mean, the stock's still up 155% so far this year. So the bar was really high going into this report. They beat on revenue, 37% growth rate on a year-over-year basis on revenue. Adjusted earnings per share came in slightly above estimates. I think the key was the fact that their data center, the surge that they saw there, 46% growth on a year-over-year basis to a record $2.17 billion. So those are the good parts of what maybe the market anticipated. As I mentioned, the bar was high going into this. But lack of clarity from the CEO on the conference call about their partnership, expanded partnership with Google Alphabet on the build-out of the TPUs, the valuation on a forward-looking basis, still about 16 times next year's earnings. So those were the concerns, and I think it's maybe a sell-off based on the fact that the bar was really high going in here. But I think an options trader trying to take advantage of this pullback, because we saw this early. It was one of the first trades of the day where a trader sold the cash.
All right, so not following through.
This was out in the October monthly options. So 49 days to expiration on this one. A trader sold over 22,000 of the October 165 strike puts, collected an average credit of about $2.25 on these puts. So that break even where they start to lose money is below 162.75 over the next 49 days. That's 25% below the current share price in there. So big cushion to the downside for this trader. And if it does continue to fall, maybe they're willing to buy the shares at a 25% discount to where they're currently trading. Put volume, about 5 times normal daily average volume that we've seen over the last 5 trading days. And this trader is taking in nearly $5 million worth of option premium with the 25% cushion to the downside.
Okay. And next up, let's talk about Amazon hitting its all-time high on August 3rd, still up about 15% year to date. It's up over 3% today, really bucking the market trends. I saw price target raises. I saw being added to the affiliate program of Google. I mean, there were some bits and pieces of news. But let's talk about the options market and your thoughts on Amazon, Tom.
Yeah, I didn't see a lot of news that would warrant, especially on a down day for markets, would warrant a 3.6% jump in Amazon at this point. You start looking at maybe some of their recent results. AWS grew it.
That's because you missed the big trade today. That's why you don't know about Amazon. They're just yapping. Amazon.
AWS plans to deploy another 2 million Blackwell.
You missed the big trade on Amazon. That's why.
NVIDIA's earnings. They gave light guidance last quarter. You mentioned the partnership with Google Alphabet, maybe lending some support to this. But
44,000 contracts, almost 45,000 contracts have traded at the 295 strike.
So 84 days to expiration. Trader bought 25,000 bullish call verticals. They bought 25,000 of the 295 calls in November, sold 25,000 of the 350.
All right, so that he just covered it. All right, so he's on the ball. Okay. I'm criticizing him, and he finally talked about the call vertical 295, 25,000 as a 295, 350 call spreads. So far, the 295 strike has traded almost 45,000 contracts today on Amazon. Amazon, the 295 strike, that's a 31 delta. November, that next week, that should be up probably around a 35 delta.
You've got to watch that correlation between crude oil, which was up 10% 2 weeks before this week, down nearly 4.5% so far this week. It's starting to stabilize under $85 a barrel. It's around $83 a barrel right now. If we can get a push lower, that's going to definitely help the airlines, cruise lines, travel industry stocks. But right now we're showing some consolidation. Maybe that's a positive for the stocks down today. Still up about 15% so far this year. Their all-time highs they hit in July, pulled back about 16%. But remember, that's when crude oil started rising on this. They still reliant on for those heavy margins in the premium seating, international travel, business travel. Those are still doing really well. They don't have to lower prices. Consumers are paying the extra pricing due to rising fuel costs. So everything seems to be going well. You just have to watch that correlation with crude oil. But we did see some bullish activity in here also. This was out in the November monthly options, 84 days to expiration. Trader bought 10,000 of the November 90 strike calls, paid an average debit of just over $2.50 for those. So the break even of 92.54 over the next nearly 3 months.
That's about 15% above the current share price. So we're going to need to move to the upside on that, but watch that oil correlation. They do report earnings on the 8th of October. That could also be a catalyst. This will capture that earnings event. They did sell out of a long position on the November 95 strike call. So what this trader did was sold out of a position that was probably losing money on the 95 strike, went down to the 90 strike to get that break even.
Delta 90s. Or let's see what Delta looks like. He's talking about Delta. Delta. That looks like a losing position to me. Palantir, looking for a bounce in Palantir. Pretty slow Friday. Okay, we broke out of this range this morning, or yesterday rather. Followed through today, made a new high. Almost to 190 today. Okay, so consolidated for 2 weeks, plus a couple of days.
Everything investors need, all in place. So yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and then even give it away. Pick up every sick. We have to buy that.
Invest your way with Schwab. Live from Chicago, this is Trading 360. I'm Marley Hayden. We track forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable content. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360 in-depth market coverage.
So Palantir looks good for next week. Nice tight range right along the pre-market. That purple line is the pre-market. What was the pre-market volume? That was about even, about normal. Post POST, that's showed up on the most actives. Post holdings, nice day today. Funko, FNKO. Angie's List popping up on the most actives. Okay, that looks okay. Angie's a $6 stock. I'm sorry, $5 stock. SOLS. Speaking of souls, what did First Solar do? First Solar was active yesterday. First Solar reversed today. RCKT. Rocket Pharmaceuticals, rocking higher. Rocket Pharmaceuticals, $4 stock. Nice volume, 2.5 million shares trading today. Rocket, 4 times normal option volume. DAR. Darling Ingredients, bouncing off the 50-day this week. Gap Stores. These are most actives. Gap Stores gapped up this morning and faded. Strategy. Okay, finally getting the consolidation we're looking for. Strategy.
So Pascal is a leading quantum computing company. We have more operating quantum computers than anyone else except IBM. And our systems work in standard data centers. And we solve business problems today for major customers. And our systems work in normal room temperature situations, which is a big advantage. So obviously we are very thrilled to be to come out as a public company, for us to get the visibility and to be known. And we are very excited about the reception we've had today.
CHKP, Checkpoint, Software Technologies. Big move today, Checkpoint. Bollinger Bands opening up, similar to what we saw with Apple. Bollinger Bands opening up. Microsoft. Need those Bollinger Bands to open up. You can see the top bands on Microsoft are turning, prices covering over it, but this is starting to turn up. Lower band will turn down as well. If that happens next week, we should see a move towards 530, 540. SpaceX, end of day, still above the 50-day. S&P, maybe give it one more shot.
And the third area we focus on is specialty materials, where we enable new kinds of magnetic
S&P.
battery materials, semiconductor materials, and LG Electronics is a big customer for us.
What's interesting, thank you for spelling that out for us, right? From energy to financials, materials. It's not a cookie cutter product, right? It's sort of tailored towards the industry and your company.
Well, that's the beauty and power of our approach. We build quantum computers in a fundamentally different, very scalable, very efficient way. Instead of building chips, we use individual atoms as our qubits, and we don't even have to wire these atoms together. They get connected to each other spontaneously. That allows us to make very scalable, complex quantum computers that have the ability to solve multiple big problems across different industries. So at the heart of it, we're solving the same problem or set of same problems for different industries, which allows us to attack and go deep into all of these customers. But from a business point of view, our sense of focus allows us to become truly experts in these industries, which means that we can focus and deliver for our customers, earn their trust, deliver value to them today, and continue to deepen our business with them. That is what's different about Pascal.
All right, we don't have much time left. Looking for a rally. It's not happening.
And our systems give those solutions today as well as a path to the best of quantum computing in the future.
And people were so excited when quantum computing came around. You know, this wasn't something we talked to you. You were talking about it perhaps 5 years ago, but folks on Wall Street weren't really looking at that. It sort of came on quickly. And as you noted, your growth in Europe and Asia, you have a great footprint there. In Europe in particular, you noted second to IBM. The growth, though, has come quickly now in 2026. I mean, how quickly are you growing, and can you keep this kind of growth up? What is the addressable market for you?
The addressable market for quantum computing is immense. There are estimates that are in hundreds of billions of dollars. But essentially what's happening is that we are living through a really amazing time where computation itself is getting redefined. And you can imagine how large that market is. We are just fortunate that generative AI and quantum computing are happening at the same time. But you know how computation changed the world. So the addition of quantum computing to the existing technology disruptions will be equally game-changing. But the beautiful thing about quantum computing is that it precisely solves problems that are difficult or impossible to solve for other forms of compute. Gen AI systems cannot solve certain problems, CPU systems cannot solve certain problems, but quantum computers do. And that's what we focus on. So when we work with our customers today, we build the quantum computers and the software stack. So our software works out of the box with existing compute systems, and it solves those problems that are very difficult or impossible to solve for our customers. That's the value we bring, and we are proud of engaging further and further with our customers.
Understood. And you mentioned Saudi Aramco, obviously a huge customer. Talk about how you're grabbing the other customers. What kind of customer growth do you expect as well? And is it in one region more than another?
So we're a global company. Our customers are all over the world, but it's our vertical focus strategy that is a differentiator. We believe a lot of new companies that try to boil the ocean, that try to solve everything for everybody. But we decided early on that we will focus on these large verticals with very important business problems, and that allows us to become experts in those problems. And this way we can deliver value to these customers. So in the case of Saudi Aramco, we engaged with them multiple years ago. We have a quantum computer which is being used in their mainline business. It's deployed in Tehran, as I said. And based on that delivery of results, we earn their trust. And by earning trust, we deepen the business.
It's the same situation in the financial services industry. So 2 months ago, based on the 2 years of work we did with Credit Agricole, they publicly announced that they are going to take our work, which was in optimization, complex optimization problems for risk and credit side, and put it into production. This is again a result of our deep focus and expertise in that area and earning the trust of our customers. So that is a very important way in which we engage with the market. And this allows us then to build up our business faster as well. Because when you deliver success with a customer in a certain vertical, then you can utilize that success to gain trust of new customers. And you also know that you will deliver what you promised.
Little bounce. There's just no volume. There's no volume compared to this morning. Much higher volume over here. Much higher volume. Just they don't seem to, no one seems to be interested except day traders. All right, this is much lower. And it's tapering off right now. You can see it's tapering off. Okay, so not much of a bounce.
So just seeing that recognized was very gratifying for us. And also this transaction gives us the strong, deep balance sheet so that we can continue to invest in our accelerated commercialization, technology and product roadmap, as well as our manufacturing ability so that we can go serve our customers. One thing I want to say is that our business, because of the unique technology approach that we use, is inherently very capital efficient. We are able to do much more with capital than many other quantum computing companies can. And it is because of our approach itself, which relies on utilizing these atoms themselves directly, as I mentioned. And this means that we do not have to make a chip. We don't have to make these complex fabrication facilities. Our systems are elegant and they perform better and they have a uniform ability and reliability as well. So these are all big differentiating factors for us. Our scientific pedigree is unique. We have a Nobel Prize winner as a co-founder, and our other co-founder invented this approach itself, which is a breakthrough approach and is now considered perhaps the most promising approach for making quantum computers.
No shortage of experts. Thank you so much, Wasik Bokar. Thank you, CEO of Pascal. Thank you. We'll talk to you again.
Thank you very much.
Coming up, a couple of ETFs to watch, seeking flexible and diversified income opportunities in this uncertainty we may be facing. Well, our next guest has some ideas for you. The watches will be right back after a quick break.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Trading at Schwab is powered by America, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Back here on the watch list, live from the floor of the New York Stock Exchange. I'm Nicole Petalides, and I'm so glad you're with us every single day here on Schwab Network. It's time for our ETF watch list segment. Jeffrey Katz, Managing Director of Fixed Income at TCW, is joining me to talk about diversification, bring us some ETFs. We had big news on Kevin Warsh today and the comments from the Jackson Hole Symposium. What were your takeaways?
Well, for starters, it's a pleasure to be here today, Nicole. So thank you for having myself at TCW. Today was interesting. I think we went into the presser with Chairman Warsh expecting it to be relatively benign. I think he was pretty clear, and the market has perceived it to be somewhat hawkish. I think we're in somewhat of a non-consensus role here at TCW. with respect to the direction of the way that rates have moved, I mean, the market has taken this to mean there's a higher likelihood of a hike in September. We do believe that is probably not the case. I think what he did today was really signal credibility, signal the Fed's willingness to hike rates, and I think he did a really nice job. I think where we may differ from markets is kind of the Fed's readiness. So it was a very well done. Apologies by Kevin Warsh today.
Certainly made it clear that he's watching inflation very closely and that you can't have prosperity with inflation. And that was sort of his point and message. Granted, yes, it's more data between now and September, but would a rate hike be okay with you in September?
Yeah, I don't think that the Fed has to hike here. I think that his conversation today, the way that it's perceived it, lifting for the Fed. You see what happened in the front end of the curve, the 2 years up almost 10 basis points just on his comments, making the rates a little bit more restricted. We don't anticipate the Fed to hike. Again, the market went from about 36% probability of a hike in September to just over 50% just on this comment. So from our perspective, we don't think that he will have to hike again. I think what he signaled today is a willingness to hike, but I don't know that they went the full distance of signaling readiness. And I think that's what the market is running with, is really saying that this was a signal that the Fed would hike. We pushed back on that a bit here.
You noted that short-term rates, as you talked about the 2 years, was higher, 10 basis points. It's the highest point since July at this point. The short-term were the remaining way that they really have the Fed tool. That is a main Fed tool, is it not, to use short-term rates?
Yeah, I think there was some ambiguity from his presser in July about whether balance sheet and or policy would be the main tool the Fed would use going forward. And I think today they made it very, very clear that their top policy tool would be rates and short-term rates. And so I think the market was very appreciative of the clarity that
It's just no momentum, no volume, nobody interested, except for day traders. NVIDIA did finally roll back over. Amazon trying to hold on to gains. Amazon, Apple. All right, so we'll have to check back on Monday. See if we get some follow through, because we're not doing anything at the moment. I'm just sitting back taking some notes for the weekend video.
Participants look for a couple things. They look for diversification. They look for income. Fund does deliver both of those to investors. What we do here at TCW is we use the whole playing field of fixed income. So it's not simply kind of a credit fund and a rates fund. We lean into things like securitized, which we think have a better value proposition given where valuations sit in those respective markets. So I think there's been a very warm reception from the market for both the ability to derive income from the fund, to lean into the diversification that the fund provides, and really lean into the active management. So we're not tethered to a benchmark where we have to be beholden to things like treasuries and corporate credit. We can lean into other parts of the market that have better value propositions, really offer better downside protection.
ACLO, we think of corporate loans and this name ACLO is a ticker, active CLO exposure.
Sure. So ACLO is a AAA high-quality CLO offering. The irony is that you asked about how we received the news today and kind of the potential for hike. It would be very well received in something like ACLO. These are floating-rate assets. The market tends to use these as cash surrogates. Very high-quality AAA in nature. They've been very durable over time, and they provide a incremental yield above and beyond short rates. So what you find in the AAA part of the CLO market is you get paid about 125 basis points above short-term cash rates. So the yield on the fund is called the low fives, 5.25. For a AAA high-quality asset, I think the market is really gravitated towards that. We've seen the AAA CLO ETF market grow to be more than $50 billion this year. So again, another exciting part of the market that does perform quite well in a higher front-end rate environment. It's something that the market participants are really gravitating towards.
All right, great to see you, Jeffrey Katz, Managing Director of Fixed Income at TCW. Thank you, Jeffrey. Coming up, some charts to watch. Let's take a look. It's a winning week on Wall Street. You may see some red arrows right now, but we're continuing the trend that we've seen with the Nasdaq and the S&P. It looks like it's going to be
maybe 4 or 5 up weeks, and the Dow may even have its first winning week in 3. Between now and the closing bell, of course, we have a lot to watch on the watch list next. Swing markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technical, and trades you need to see before the bell.
All right, breaking down a bit more. S&P breaking down a bit more. Nice morning and then complete fail.
Taking a look at the S&P 500, which now looks like a winning week again in the last 5 weeks. What's interesting to you today when it comes to the levels, Rick?
Yeah, good morning, or good afternoon, rather. So we can see here now the SPY is number 3 out of our 4 indices here, up 8% versus the Russell, and the NASDAQ. The outperformer is the Dow, which is the underperformer relative to our major 500 product here. So what we can see now, if we look at our chart more specifically, 779 was our intraday high, but mostly things topped out around 777 or so. We can see that we had a very short term floor that was developed.
New York Fang. Back underneath this breakout zone. 60-minute looked good earlier. Moving back to the 10 EMA. Not surprising. We moved back to the 10 EMA. We could bounce. We have started an uptrend. Microsoft. Beautiful chart. Microsoft. Much better stock chart than we've seen to start the year. 60-minute 20 EMA, barely a pullback so far. Apple, same thing. 60-minute 20 EMA, just a little bit more of a pullback. Amazon, pretty big trade today, mentioned. Amazon changing direction, perhaps? Looks like it. Just looking at the S&P, not much to see right here. S&P back below its 20 EMA. So this is a stop. Looking for a push back up next week, if we can get it. S&P is failing at the moment. Failing to bounce with a little bit over an hour and 6 minutes to go.
Or so, with the snow coming into its full strength here around 7:40, and then dropping off again near 7:30.
All right, and I was just looking. Domino's Pizza 5.5%, Workday, ServiceNow, Turner Communications, some of the best on the S&P 500 today. Let's look at a firm which is having a nice day and is a winner for this month. Your thoughts on the technicals on the firm?
Sure. So if we think about a firm here, again, a channel type shape here, 2 trend lines pointing upward here. In this case, our low point here and here, connecting here and here as well. We started out down here near about the low 60 region here. Our dark blue trend line here has been broken as well. Now we have made our big push to the upside. We have fallen off significantly from those old highs that we established on an intraday basis here near 90. Now we, after opening up near the set of old highs we saw here near 86, we find ourselves now near the 81 level, which also marked the previous relative high before our breakout. So now we are mostly kind of within familiar territory here with some emphasis on these horizontal levels that we've established. Our moving averages here, 5-day and 21-day are the closest ones. Those come in near about 77 to 78 or so. That would also be right about the point where we're starting to test our old blue trend line as well. So be on the lookout for that supported area. RSI improving above 50 midline here, but still.
Strategy. What did the Bitcoin stocks did pull back today? Finally giving an opportunity. If you're looking for follow through, it's probably going to do something like, I would imagine it'll come back a little bit, maybe consolidate and then push higher. The 200 day is right here. That's the 200 day. Okay, Bitcoin. Okay, Bitcoin giving you your first consolidation. This area. All right, so that's what we're looking for. NVIDIA, no follow through. Nice little turn up, but that turned into a bear flag. Friday is not the best days to try to put on new risk. As you were just seeing, the volume this morning gradually tapering off. Got a nice little spike in volume just now on the short covering. So we have to wait until next week, it looks like, unless we get some sort of bounce end of day. S&P, double bottom maybe. We continue to see bear flags. The trend is down. Okay. I think Mondo mentioned IWM earlier. That failed to follow through. S&P.
Big week we had this week, but you have to keep it right here. We have market on close next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because you're
All right, let's take a look at end of day hedge flows. All day long, all we've seen is hedge flows moving lower. Hedge flow line moving lower all day.
With Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Good afternoon, TGI. It's 3 p.m. here on Wall Street, and this is Market on Close. I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll break down Kevin Warsh's commentary in Jackson Hole and what it may indicate about the future of Fed policy. Then we'll check in on the media landscape and the future of entertainment as near the end of the summer. And we will close out the show with a discussion on South Korea's role in the AI trade and one way of gaining exposure to the Korean chip industry. But here's what we've been watching today. The market got a hawkish sounding.
All right, Netflix turning up right here.
Jackson Hole, who signaled the central bank may not be done fighting inflation. He said the recent data has been improving over the summer, but the underlying trends haven't meaningfully changed, adding that the 2% target is firm and fixed, and so that is the focus. Stocks were subdued going into the keynote address, but fell during the speech as bond yields rose, particularly on the front end, flattening the curve. The dollar also strengthened, and expectations for that September meeting went back to essentially a coin flip, meaning a roughly 50% probability of a rate hike next month. Now, stocks have still been up on the week, though, and that's thanks to some strong tech earnings this week. Today, investors are rotating into the Mag 7, more of the growthier hyperscalers and softwares and out of chips and hardware, but they're being selective. Cybersecurity firms are under pressure, and Chinese stocks are performing better than their South Korean counterparts. Let's take a look at where the market stands as we near the end of the trading day here. Less than an hour to go until you can start your weekend. So as you can see here, stocks on the back foot. We started on the flat line for the S&P 500, waiting for some direction from what we got from Kevin Warsh. It was a bit choppy throughout the course of the morning session, suffice to say. We were sort of range bound, flip-flopping between marginal gains and losses there, but we are looking like we're ending the session mostly in the red here, as I mentioned. But the 7,700 mark still holds on the S&P benchmark. As you can see here, the Nasdaq 100 getting pressured, no doubt, by, as I mentioned, this rotation. We're seeing out of chip stocks today. Could be some profit taking given the gains we saw yesterday. We're particularly seeing some pressure building for the semi-equipment makers, as well as some of the memory names too. As I mentioned, as we see that rotation into some of the software names, into some of the Mag 7, sort of the areas that have been seen as safe havens, the more growthy type stocks. Dow Jones is on the line right now to the downside, the Russell 2000, no doubt getting pressured by those yields on the way higher, down 1.3%, not good for the rate-sensitive small caps. And checking in on some of the futures products, as I mentioned, yields have been the big story today, as we have seen those picking up across the curve. Look, the 10-year is at 472 now, so we continue to pick up here at 5 basis points, but look at the 2-year, up 11 basis points right now. We are at 435 on the front end, and the 30-year, which actually dipped during the speech, is now at 520, up around 2 bips as well. And it comes with the dollar has strengthened, as you can see here. We're up about 1%, 99.65. That means gold on the back foot. That was a very obvious reaction. Bitcoin coming off, gold coming off, following the hawkish remarks, and crude oil, which obviously have been a big story for us this week, with all the geopolitical backdrop going on as well, at $83 a barrel right now, with Brent just knocking on the door of $90 as we go into the weekend here. So
That's how we're shaping up. We'll be less than an hour to go until the closing bell. Joining me for a look at some of the top movers of the session is Nicole Pavlidis. And let's just start with Marvell, because that's one of the bigger ones that we were watching yesterday. Walk us through what we've seen as far as the reaction.
So when I look at Marvell and I see it down about 10%, I just had a great conversation with Noah Hammond all about Marvell. And we were talking about the strategy going forward. The partnership with Google certainly seems like good news. The opportunity.
S&P trying to base here, maybe dealers trying to close positions. What time is it? 3:05. 3:05. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 3:05 p.m. Friday, August 28th. Was a good morning, and then we faded below VWAP. Most stocks joined suit, continue to move lower, so we'll have to look for a follow-through on Monday or a bounce, whatever we're going to get. Futures, the weighted signal has been bearish all day. Tick cumulative pointing lower, 60 minutes into the close, 60 minute, 4 hour. Four-hour had been bullish into today. It's red now. 30-minute. All right, we're trying to turn off of this low. Futures are starting to turn up a bit. Shorts covering most likely, just above support.
What's your sense of what the chair thinks is an efficient process to get that inflation rate back down?
You know, clearly raising rates and political front. Yes, two more meetings for the midterms. Clearly, Trump doesn't want any increases before the midterms. Can he hold it off? But you know, it's the wonder about whether it's disappointing. Can he hold off until December? Politics that have to do with that. But you know, when you listen to him, he said, "I don't think the current rate is restrictive." The rate that the Fed has well below what the rate is right now. The new program are at 2.64%. These are statements of someone saying we are restrictive enough right now. He has the guts to raise them in September in face of the midterms coming up in a month. We will see. It's going to be interesting.
Meanwhile, you've got Treasury taking some criticism for its actions that have sparked some really high-profile criticism, notably from Stanley Druckenmiller this week and from Elizabeth Warren, who sits on the Senate Finance Committee. Well, today, Scott Bessent replied to her criticism with his own scathing letter defending his actions to prop up the yen. He wrote in part, Professor, disorderly yen markets can trigger forced unwinds, which could destabilize global markets and ultimately raise borrowing costs. And then he went on to suggest, and I quote here, a tutorial on foreign exchange for dummies to Senator Warren. Well, at the same time, Treasury's doubling its long end bond buybacks. What point do you think does market stabilization become price management? Does Treasury risk distort the
Probably dealers closing positions. We got 50 minutes to go.
What do you think of best in trying to twist the curve and lower the long end? However, I'm sure maybe Steve out there will be the first one to ask Kevin Warsh that Steve meeting. So he didn't have to address that.
All right, we're starting to get a little bit of lift here, and Mondo.
If you'll stick with me, I'm going to bring in the rest of the panel now. We have Citi Scott Croner and MetLife's Drew Mattis. Gentlemen, great of you to join us. Thank you. Drew, I want to start with you. You still think that the Fed is going to hold? Why?
Margin is still a hold. I don't actually really see the case for a rate increase here. And I think if you look at the response of the markets to Warsh's speech, he gave the markets more than they could ever hope for in terms of being hawkish. And once he gets for his troubles, he gets higher 10-year yields. That's probably not where he was hoping to kind of end the day. So, he gave up a lot and he got nothing in return. And I'm not sure why he would continue down that path when hiking interest rates is not going to do anything to restrain AI investment. And the most you can hope for is that you're going to hurt, lower income consumers who are trying to borrow money to kind of maintain consumption.
I'm just curious. I mean, is it really that you think that AI spending is what is driving the inflation?
No, I don't think anything but here's the thing. I don't think anything that's driving inflation is actually all that interest rate sensitive. And so I'm not a big fan of performative policy moves. I don't think Chair Warsh is a fan of performative policy moves. I think he kind of got forced into his comments today. And, I think if he can figure a way out, he's going to take it.
All right, let's go to you, Scott. If we're looking right now.
Okay, there goes Google. End of day, Google turning back up. Amazon trying to hold on to these gains. Netflix coming off the low. Bounce off of VWAP. Nice. Looks good on the daily. Needs to trend. 200 days just overhead. So that's our target for now. Netflix. What is Netflix? Let me just check Netflix on the daily. RSI still got room to run. RSI still has room to push up on Amazon. Netflix, rather. Netflix. Okay, we're trending. Okay, so a couple of days back, follow through. Volume's not super above average. Pershing Square buying a position back here in July, June, July. Looks good. Momentum looks like it could continue.
Earnings, I mean, a lot with a blockbuster with NVIDIA, and with Salesforce, all the software coming together, blowing out estimates, forming a partnership. Oh, wow. It is interesting, follow through now, which does mean that high that NASDAQ hit a few months ago, is a pretty durable ceiling there. And I think if we're going to see a big bull market into the second half of this year, it's going to have to penetrate that level, and if it doesn't, there's a overhang to be sure.
Yeah, Scott, you're actually cutting your tech exposure back right now. Why?
Well, we did that going into Q3, and it was on the heels of the strong semi and hardware performance in Q2. I would, point out that as part of neutralizing our tech weighting down to market weight, we actually lifted our software underweight up to market weight. So we've been viewing this from a fairly neutral perspective going into Q3.
Okay, Amazon. I had a limit order on Amazon, never got filled. I'll wait until Monday. I'm going to close this limit order. Okay, Amazon. What's strategy doing? Strategy. Okay, turning off the low. I had a limit order to buy Amazon. If it got a little bit lower, never got there. $1.75, never got filled. So I'm going to close that position. I'm going to close that order and look at it on Monday. Palantir. Looking for that to follow through next week. Kind of died today at the highs. Could pull back in first. Palantir.
Consumers are actually really dependent on the equity market continuing to do well. I think if you see a break in the equity market, you're going to see a break in the consumer. And I think that kind of thing can fall apart really fast. And the thing that will speed that along is
next week we'll be able to do some iron condors, 1 DTEs like we did this week. Today we didn't take it because of the event risk.
Thank you, gentlemen. Appreciate it.
S&P no follow through. Netflix looking pretty good off the low here. Amazon. Okay, so with Amazon, Christina's talking about Amazon. With Amazon, this has just been moving sideways. I'm looking for the 10 and the 20 EMA to catch up. Much like some of the other stocks that we've been trading lately, how Apple coming into the day, it cruises to the 10 EMA, and then we have a nice follow through for a confirmation so we can put a stop right underneath. I'm looking for that next week, so I'm not going to buy Amazon today. I'll wait until Monday. CRM, same thing, CRM. I was thinking about getting back in today. I took profits yesterday after sitting in the stock since March, added to it in June, added to it over here, May, end of May, added right here, and then it reversed on us. Had to sit through this for several months, basically, since March. Broke out yesterday, so I took the profits off the table. I wanted to give myself a day to think about it. Today, it continued, so CRM looks really good. What else? Workday had a good day. Earnings, Workday. Workday was up, looking really good. We'll look at it again. This is another one, 60-minute, 20 EMA. See how it's moving sideways? Want these moving averages to catch up. We'll get a bounce, then we'll put a stop right underneath that 10 EMA, right around 201 or so on Monday. This is probably going to follow through. Okay, Workday looks good. Google, trying to do something end of day, Google. All right, so Google looks pretty decent. It came back, almost got to the 10 EMA. 10 EMA is turning up. It's just starting to change trends. So Google, we can wait until Monday. We don't have to take on any risk over the weekend. All right, S&P, what's it doing? S&P is trying to do something here. S&P 500. Disappointing little fade today. All right, so watch the S&P here, starting to move. All right, we're starting to move. S&P. If you're watching this, Mondo, I don't know if you're watching or not. I know you had some calls before. See if we can't rally up here. Get back to 77.30 would be nice. Produce a spinning top on the daily. Okay. We're so close to a new all-time high. Maybe next week. Ryan Dietrich looking for a follow-through. A lot of people that I watch what they talk about, their analysis. Ryan Dietrich, one of them. He's looking for a follow-through into September.
We see the tech trade as moving away from show me the model with people to show me the money. So we've definitely seen in the last 48 hours a strengthening of the fundamental AI story. The bar has been raised for investors, however. We do see the themes sort of playing out this year: return on capex, broadening of the AI trade, as you mentioned, going into September, and the industry moving from AI training to inference. So lots of balls to juggle, you would say, in the next month or two.
And when we're moving to inference, you're really looking at some of these companies tailoring how they're using AI for specific tasks and making money that way. So looking at your top picks here, talk to me a little bit about Broadcom and the way that theme or that thesis plays into Broadcom.
Yes, so NVIDIA has been great for training models. But for huge repetitive type workloads, Broadcom is our top pick for the next evolution in custom AI chips and inference play. You really don't need NVIDIA to lose for Broadcom to win in that space.
What opportunities do you see in software?
Well, the software's been an interesting one. The easy AI trade has been buying chips. The next phase is requiring which
Apple, end of day, looks like short covering on Apple. All right, the 320 call wall did hold. We were briefly above it. That was a nice little short squeeze to the upside. Gave you an opportunity to exit into strength.
So we think that the software winners are going to be the ones that have proprietary data, mission-critical workflows. However, AI will destroy the rest if they don't have a moat.
Dan Niles told us this morning on Squawk on the Street that he thinks that NVIDIA sales numbers were inflated with double reporting companies putting more on the order books than what they are ready to buy just because they want to hold their space in line, so to speak. Do you think that NVIDIA's numbers reflect that? And does it make you doubt what NVIDIA is predicting for next year, 70% growth?
It's a good question. That's actually one of the risks that we flag.
All right, Microsoft's still fading. Does look good on the daily, Microsoft. So this little bit of fade here, not too concerning. We could pull back a little bit into next week and then follow through. RSI does look good, though. Palantir. Our RSI is a bit overbought now on Microsoft. However, MACD and stochastics are turning, volume picking up. So this shows that there is some buying up here.
Exactly. High rates, we're facing them now. We think that higher rates will be a headwind, certainly. It lowers the value for AI names, which have a longer duration earnings. ROI, investors are moving away from just show me the capex to show me the return of the capex. And they're punishing those type of companies for lack of ROI.
Intel still consolidating, looking for it to move higher. Same thing with AMD, still in this consolidation. The chips, SOXL, above the 200-day, consolidating after a pullback. So what I'm anticipating until otherwise, until there's something else to report on. Okay, it looks like a cup. It looks like the left side of the cup. All right. Looks like we'll build. Could come down here a little bit, but then eventually move higher. Get RSI to turn up. MACD to turn up. Stochastics to turn up. Okay, so the odds are more in favor of consolidation at the 200-day and then a bounce. On the chips, SOXL. Let's see what Micron looks like. Micron. So today is an off day. Pretty decent little bounce on many stocks. S&P trying to turn up. SpaceX, what's SpaceX doing? SpaceX, nothing. It is coming off the low. SpaceX, it's staying above the 50-day. So this is a decent setup for next week. SpaceX, relatively decent position. We've got higher lows. Higher lows. We got this pivot, a couple of pivots overhead to deal with. Okay, so it looks like next week we could see a follow through. SpaceX pushing a bit higher. One thing's for certain, the cost to buy options is much less than it used to be. We got implied volatility around 50%. It used to be 100, 110, 150%. So options are cheaper than they've been up until this point. All right, SpaceX looks okay. S&P trying to do something, but really not that interesting. Nothing to see here. All right, we've got 30 minutes to go. 30 minutes to go on this Friday, the 28th of August. We got one more trading day in the month on Monday. And then we start off September. Can't believe we're easing into the midterm elections. 3 months away. 2 months. All right, Netflix still pushing higher now. Netflix, Microsoft, NVIDIA, Apple, Tesla, Snowflake at the lows of the afternoon session. Amazon trying to turn back up. Amazon, I tried to get in. Limit order didn't happen. I wanted to get a cheaper price for those November. What do we say? November options on Amazon were active today. out in November. Amazon. We had 25,000 contracts trade. Amazon. 25,000 contracts traded. What did we say? 195, right? No. December? What? Oh, it was No, it was Amazon, right? Amazon looking pretty good though. Amazon looking good going into the close. Turning back up. We'll wait until I will wait until Monday. We can get above the 21 day next week. We'll look for a follow through. Bollinger Bands are tight, so we're looking for them to open up, similar to what Microsoft and Apple did today. Microsoft with a nice move, and Apple, though Apple did fade from the high, so did Microsoft. Was a nice pop. The Bollinger Bands moving in opposite directions, so it's telling you to look for a follow through and a fast move on Monday. Netflix turning back up some more. Okay. S&P, no go. Workday, Domino's Pizza, Lulu, ServiceNow, and Charter Communications, top 5 on the S&P 500. Workday, Amazon, Airbnb, Intuit, and Netflix, top 5 on the NASDAQ 100. Comcast is number 6. What's Comcast doing? CMCSA. Did they ever spin off CNN? I believe they spun off CNN, didn't they? What's Disney doing? Disney taking off after a pullback. I really liked what Disney started out the week looking like. So we'll have to wait until Monday to see how this plays out. It's not really that overbought. Yeah, MACD and stochastics turning down. So this pullback to the 21-day 9 EMA, maybe we'll get a better entry on Disney. Broadcom still below the 50-day. It's back above the 200-day. That one's not performing as well as I'd like. Neither is NVIDIA. This pullback on NVIDIA, I don't know if there was any reason for it. They just they sold it. So Affirm Holdings, we had an iron condor on this one. Complete fade here. Affirm. All right, so let me see there. Okay, I have the 75, or no, the 70. 70 put. Okay, so the 70 put on Affirm. We continue to drop off. What a big move there, huh? Affirm. So they expired today. I should have done next week. I was thinking about that. Affirm Holdings. 70.65. Yeah, it's $8 away. Not going to get there. Hope everyone had a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We've got 25 minutes to go. It is Friday, August 28th. Mondo's looking for a bounce here in the S&P. I was hoping for more out of this too. Gave back some of yesterday's gains. Still a positive day, but gave back some gains from yesterday. NVIDIA and Taiwan Semiconductor, the semis, giving back a little bit of those gains. Taiwan Semi, complete reversal there. And they had a good note out of NVIDIA. Let's see, earnings, whispers. All right. NVIDIA beat expectations, handily beat with 124% earnings growth, still with 105% revenue growth, 106%. Taiwan Semiconductor, they beat also July 16th. Earnings look good. Both of those pulling back pretty aggressively today. I would think it'll be an opportunity next week. Taiwan Semi on this pullback. Never have done really well on Taiwan Semi. Always seem to get subpar results on Taiwan Semi. NVIDIA have a little bit better results, like 60%. Win-loss, 60, 65%. Taiwan Semiconductor is more 50-50. I don't know about you guys or ladies. Taiwan Semi, I tend to have about a 50-50 win-loss on that. So don't trade Taiwan Semiconductor that often. Next week, we'll do some iron condors again, 1 DTEs. Today, we didn't do it because of the event risk. Pretty decent move today on the S&P. Highs to lows. All right, so high to low. Okay, so 77. What was the high? The high was 77.71. So 71 points. 71 points. So if we had taken iron condors at the open, we got pretty close to a stop. Compared to like Monday, Tuesday, Wednesday, pretty decent flat price action. This was a pretty big move, almost 80 points plus or minus. All right, Netflix looking better. Netflix. Okay, starting to turn up end of day. Netflix. Netflix turning back up. DraftKings, I just noticed DraftKings popped up on the most actives. DraftKings. Okay, that faded from the high. Newell Brands, NWL, Newell Brands. Okay, squeezing, looking for a break to the upside. It's a fairly inexpensive stock. Maybe it moves next week. It's got an ATR of 30 cents, not a big mover. ServiceNow. Breaking out. That's one of the better ones today. ServiceNow. Holding the gains from today. ServiceNow. Okay, 60-minute 20 MA. A bit extended. You want to wait for it to pull back. The next time it pulls back, ServiceNow will be a potential buy. Right now, it's at the high of the day, so you don't want to buy it there. All right, S&P is starting to turn now. S&P getting a little bit of end of day Mojo. Okay, S&P. Apple turning back up. Amazon's at the pushing back up as well. Microsoft starting to bounce now. Shorts covering on Microsoft. Microsoft short covering. Okay, S&P, small bounce. Okay, looks good. Little buy program end of the day. Apple. Apple turning back up a bit. Back above the 320 call wall. So dealers are going to have to adjust this call wall. Probably 325 or something like that. Once we see Money Magic's updates this weekend, we can reassess. Apple, Microsoft. Microsoft looking really good. Okay, bouncing at BWAP. The slow slide on a Friday. Lack of interest. There goes Netflix. Netflix on the move. Netflix popping. Netflix is popping now. All right, that's a nice little rally. Microsoft turning up. All right, so Microsoft, what did we buy? 550, 560, right? Microsoft. Yeah, I posted that in the room, I'm pretty sure. Trading 550, 550. Microsoft. I must have posted it in the trading room. Microsoft. Yeah, it took profits and then I rolled some out to March 550, 560 spreads. Okay, Netflix. All right, a little bit of bounce there and profit taking. S&P 500. Okay, even that little profit taking right there. 13 minutes to go. Hoping for better. Didn't happen today. Got a nice little rally up thanks to Warsh, and then they sold into strength.
YTES may resume in less than a minute. ESQL. ESQL. YTES may res in 10 seconds.
Okay. Amazon. Amazon, Microsoft. Okay, Microsoft fading quite a bit. Still, though, it's up quite a bit as well on the day. Netflix. Somebody took some profits just now. We just bounced. All right, so we had this nice little bounce from VWAP. Somebody took profits right there. You can see that pretty clearly. Okay. Netflix. Nothing to do here. If you want to sign off, have a great weekend. We got about 10 minutes to go. NTWOW. ORIO. Okay, here we go. Netflix. Netflix. All right, go time, Netflix. Let's break out. All right, is that somebody trying to take profits off here? Color my world. Green. Looks good. 8 minutes, 40 seconds to go. Apple looks good. Did I take Apple off? No, I have Apple for next week as well, Mondo. No, I have October. I have October's 330, 335s. Apple. All right, Netflix is going. Looking good. Netflix. Can we do it? Can we break out here? That'd be so cool if we broke out. Okay, there's the high of the day over there. Okay, the high of the day is much higher. Okay, that's the high of the day right there. Can we go?
YTES may resume in less than a minute.
High of the day. Let's go. Netflix has a life here.
YTES may rest in 10 seconds.
All right.
All right. So they are playing shenanigans. All right, Tesla turn shorts covering. Tesla short covering. Five minutes.
PSQL.
PSQL. PSQL halted to the upside.
PSQL.
All right, Netflix pulling back in a little bit. Tesla turning back up. Tesla turning off the low. Low short covering. That's all this is. Low short covering. Okay, still in this wedge. Need to get above the 50-day next week. Brent doesn't look that great. Here we go. S&P 500 last couple of minutes. 2 minutes to go. S&P off the low. Amazon back up to the highs. Looking good, Amazon. All right. Hope everyone has a great weekend. We got about 20 seconds to go. I'm your host, Kazavidi, coming to you from closingprint.com. I have a hard stop right at 4 o'clock. Got to beat it out of here. Have a good evening, everyone. We'll see you on Sunday for the weekend video about 2 p.m. or so. Take care. We'll see you on Sunday. Ciao. Have a great weekend.